IFFCO Tokyo, Level Insurance Company. Madam, please.
Okay, good morning everyone, and I think we have still some more people to come in, but however I must thank the organizers for giving me this opportunity this morning to address all of you. You see, I now live in Gurgaon, and Mumbai is always a pleasure to be in. It's always so professional to be here and meeting all the stalwarts of the insurance companies. The topic for today is something I'm sure many of our colleagues will be presenting. However, from my side, addressing this gathering, I thought we'll raise one or two industry level issues. I don't know anything about life as such, but what I can talk about is the general insurance industry and the pangs it is going through at the moment. If you look at our industry, we are in deep trouble at the moment with loss ratios of own damage going up by almost an average of 7 to 8% in the country. It's not just our company, it's everyone is facing this problem. If you look at Maruti OEM, they have reduced their prices. And if you look at all the OEMs that are there, I think there is a big stress on what I would call is our own damage, which is our bread and butter in the industry. Motor is, everybody breathes motor in our industry as such, because still 40% of the premium comes from there. Now let's look at crop insurance. Crop insurance today, with unseasonal rainfalls and the kharif is completely shaken up with lots of disasters because of nature's fury. Then comes health insurance, GMC. So where on earth is this industry going to? Sometimes I just wonder and shake and shiver that I am not sure whether what's going to happen, because earlier what we used to do in India, and I used to argue this with most of the reinsurers internationally and some of our promoters as well, I used to say, please do not compare us with the US market or the UK market, where people talk of only combined operating ratios, where they would take pleasure to say that my combined operating ratio is 90, 72, 75, some would say 80. These are unheard numbers. And I used to tell them that in India it is a float management market. It is not typically a COR market. Today I don't know what is float management as well. The investments are also down. So we are going through one of the worst cyclical, I would say, deflation of our business. If you look at motor vehicle production is low, all-time low. Industry growth, if you see this morning's newspaper, I think what is being predicted for us is an all-time low of industrial as well as the GDP growth. So what as an industry are we left with? Where can we really make a dent and make this industry, again, once more, a viable place for everyone to set up shop? Sometimes I feel so sad. Everywhere, we hear this company is being sold or that company has been asked not to do business. You really feel bad because you are at the end part of the same brethren. So there's only one space which I think is left for us to really do well and compensate for the other losses is health insurance, that also in the retail space. Of late I have been actually going around in the Mofussil towns of tier 2 cities, tier 3, not even tier 2, tier 3, because that's where we would like to be, and our promoters belong to that area because fertilizers are typically sold to villagers and farmers. Now when I go there, health is something that it amazes me how people are willing to look at it provided they get a product which is cheap and nice. Now recently we launched a product called Mosbite. I don't know how many of you are aware of it. It's a vector-borne disease. It's a very small product. And that really sold like hotcakes in the Mofussil towns because they thought that was the kind of product they are comfortable with. So I think there is a session today when somebody will be speaking to you on how digital platforms can play a big role. With whatever digital methods we use, I think human touch will always be required. So now coming to the segment of business that we should focus on, and we as an industry would really have to promote healthy insurance plans. Not plans just to get some money in, but which benefits the customer. And how should we reach out? Is digital going to take over most of our physical distributions? The answer is no. The answer is physical distribution will continue. The method in which we operate will be digital. So technology is now a given, but there is, I think all of us are aware there's a difference between IT and digital. Okay, so digital is the way ahead for some time. And what, again to use some few knowledge that I gained from this Gartner 3-day conference which I attended globally, that they're showing the trends, what's happening as a intelligent insurer. What they're saying is that by 2020, which is just next year, it's not too far, globally, analytics will play the biggest role in selecting your customers. So it's machine learning coupled with analytics will be used to generate business which probably would be profitable for most companies. And that's of course in the retail space. So underwriting in all probability will be automated. So therefore, what are we left with? Distribution. Now distribution, which channel, which matrix can be used? I agree that many of us feel that riding back on Amazon or PhonePe or Paytm and others, we would be able to sell attachment products. But looking at India, where we believe in social togetherness and where we believe in social harmony, I am not very sure whether those policies will be one-time sale or they'll come back for renewal. So leaving a thought with you that it would be a combination of digital OPEX with human intervention for sales. So although the products can be small and we call them affinity, we call them by different names, but what really is happening in the market is a very big shift from researching completely online and then trying to choose a product that we would like to buy. So there are some thought-provoking situations that is actually hovering all over us, that we are in loss in motor OD, our crop insurance, which is the second largest line, our GMC, which forms a big line of business, and then we are left with 12% commercial lines, which is fire, etc., which is reasonably doing well. Can this 12% compensate for the remaining 88% of the business? What is it that is facing large and lurking in front of us? It is adequate distribution of products which we probably can build up, which can build some sustainability in all our P&L and our balance sheet. With this thought, I leave you, not to begin very well on a note which I think could have a bit of threatening, but I always tell my teams who come and tell me, ye company itna paisa de raha hai, I can't distribute, wo aisa kar raha hai. All I tell them, what is the insurance penetration anyway? It has decreased. When we began 20 years back after a liberalized economy, it was that time 0.64, maybe Praveen, what was it? 0.6 up on something. We moved up to 0.8, came back now to 0.7 again. So therefore, the positive side or the rainbow behind our head is that there is a huge population waiting for us to reach out. So if we can overlook some of these numbers that I've told you about OEM, crop, etc., there is a huge population waiting for us to reach out in terms of health insurance, which is simple, easy to understand, same with life products. And the last one is they also do not have many of their vehicles insured. Home is by far a large cry. Maybe whenever there is a flood in an area, some people buy and then afterwards everything is forgotten. So their digital probably can play the first round of football, I would say, with the digital teams can play in so-called popularizing home insurance. So we have a huge market to cater. The current P&Ls may not look bright, but in the next 3 to 4 years, if we all can get our distribution right, we can get our customer segmentation right, we can cross-sell, we can use analytics and a digital OPEX, I think we are going to go great, and India then becomes more of a COR market and not just a float relevant for any of the promoters. With this, I hope the whole day is an interesting day with a lot of debates, lot of discussions, and Wish you a great year ahead. Thank you very much.
I have one question.
Yes, Madam.
See, I understand this new product has come for the it's a very good product, everything. But why there is an age limit that up to 65 only you can take the policy?
No, we will remove it, madam, as long as we sell 3-4 lakh policies. At the moment, we're just trying to gather some policies in terms of numbers and see how it behaves, which we will try and match it with the retail health in the 80 years.
No, see what happens, that today main thing is available is for the senior citizens. But I have seen everywhere all the insurance companies are putting senior citizens at a side.
No,
And that is the only reason.
I hope they pay the money, no? I'll give you an example. I know who is here from National Insurance. I had National Insurance in the year 2000. Okay? At that time, all I could afford is to buy 1 lakh rupees policy for my mother and 1 lakh for my father. Today, I renewed the policy yesterday. They charged 29,000 rupees. 29,000. So if I had to put that pool of 29,000 for 4 years, I will not need insurance. So even there, I think we have to also build a corpus to correctly price the product. I can afford 29,000, but how many people for 1 lakh rupees can afford 29,000?
See, I do understand.
So madam, for senior citizen, honestly, we haven't come up to that fine actuarial findings even now, because the corpus that we use for health insurance is very small in retail health. Hence, I think our pricing becomes little high, and then people say, you're not competitive. The word that we hear is we are not competitive, correct? But taking your point, I know I will also be a senior citizen in a few years. I will also want someone to share. So, well taken. I wish maybe give us some more time, and once we build some good volumes, we will definitely. And this mosquito bite till 65, ये तो मैं कर ही दूंगी. इसको आप चिंता मत करो. Because this is a very small product. This does not do it. Huh? Yeah, and we've got tremendously good response in this mosquito bite product. Very, very good response. So we will do this, but future, I'm just telling you, why old people? See, the new thing which will come up now in India will be elderly care as well. So we will have to work towards, maybe the life company should be actually working on this, elderly care. And you really will have to depend on certain surrogate data to see how people struggle when they have a life policy, let it not go. This is just a food for thought again, that if we could have life policies which don't pay us the money, because at the end of the day when I die, why should my children use my hard work? If I am on diapers and I am on calipers, let this policy take care of me till my burial ground, no? We really don't have this facility in India yet. So another food for thought for the life company. Can you pay me when I am absolutely ailing? You come every month and pay me that money. Can we change that customer experience? Okay, thank you.
Thank you, madam. Now, the following points are discussed here. One is a loss ratio. About loss ratio, penetration ratio, product innovation, digital marketing. Now, the penetration ratio is last. If you see that after liberalization, there is a talk in all insurance summits, panel discussion, but that is actually connected to GDP. Second one, affordable product. In insurance industry require affordable product, risk-based product. The commercial insurance contribution is 12%. We can increase up to 25-30% if our distribution channels and underwriters, they have make a product and knowledge about the products. It reach the public. That is required. Then Madam explained innovation in distribution. Of course, that is required. Digital marketing. Then now insurers are looking for premium growth. Premium growth is happening. It is every quarterly, this result is coming. GI premium growth 15%, life insurance premium growth 17%, etc. And looking for an underwriting profit and claim ratio. Present scenario is a loss ratio. The main reason is actually climate change. Climate change affected in their insurance industry in India. That is also one of the reasons. Thank you, madam. Again. Now I invite our keynote speaker, Mr. Praveen Gupta, ex-MD and CEO, Raheja General Insurance Company. Sir, please come.
Good morning, ladies and gentlemen. When I was first approached by Mr. Jain, who's become a good friend, doing such a great, wonderful job, and I shouldn't be missing out on Mrs. Jain. She's the quiet one behind the scenes, but an amazing team doing some amazing work which insurers need to do to project themselves. The date was supposed to be 19th of November, not because it was one of our late Prime Minister's birthday, but because it is supposed to be an International Men's Day. And to tell you frankly, notwithstanding my being a champion of diversity, I missed out on it, and I was pleasantly surprised. So I promptly said, yes, Mr. Jain, I'll be there. But for some reasons, this date has been brought forward. But having said that, I will still wish to touch upon the importance of International Men's Day and how I look at it from a philosophical but practical implications. And in fact, many of you may wonder what this logo is here. Some of you may already know it. It is basically a symbol of Taoism, which is a Buddhist philosophy which originated from China under influence of Indian philosophy, yes, but it's called yin and yang. So basically it's two forces, men, women, dark, white. So basically two forces, how they oppose each other and also work in harmony. And I want to contextualize it in insurance terms. But having said that, just as a coincidence, having Anamika here, she and I were a part of a team, and quite a formidable team in our times. It's always a pleasure to have her here and speak. What works best and what made it formidable was because we would speak our mind, not mince any words, and you saw it. She came here, delivered you the bad news, but very focused on getting the end right. And essentially that is something that is her virtue, and that's why I respect her for that. In many ways, it's a yin and yang that she makes sure works. She's breaking the bad news. She has a strategy for how to reach the end in mind. Unless we accept the challenges, we are not going to be reaching the intended goal of why this market was opened up and the very other rationale for whatever that's happening. So what I'll try and do is, the International Men's Day. So I'm bringing it forward by 4 days. While everyone celebrates International Women's Day, which is, if I'm right, 18th of March. 8th of March. How can I forget that? Thanks for, I wasn't doing it on purpose, but I'm glad you corrected me. And some of you were here on 8th of March, and we had a grand celebration. And Anamika, you were here too. It was a wonderful one day. Ideally, this should have been on 19th, but 4 days ahead rather than 4 days behind is not a bad idea. So men, have been responsible for the family's bread and butter. Partly they had to blame themselves because they would want women to do a lot of thankless chores and tasks at home. But having said that, internationally it has been established that a lot of stressors are at work. The suicidal rates in men is growing more than for the other gender. We are prone to many killer diseases and beginning to live less and less. So a lot of stress that falls on one part of the gender has its implications for the family, and the same force also manifests itself in business of, say, insurance. So insurance has again become a very masculine business. So while we are a business of trouble, it requires a lot of sympathy. It needs to generate a lot of trust. And some of the very quick fire reasons Anamika just mentioned challenge establishment or reinforcement of trust. So these are forces that require a lot of, it's not about man, woman, it's about the feminism and the masculinity, and those need to be blended nicely. So our business, if we are going to be very, very, cannibalistic or very aggressive, so that is lacking many of the things that show in an imbalanced personality. And that's where the yin and yang comes, and that's where we need to bring in more of feminine. So our business is about trust, our business is about trouble, our business is about continuity. So a lot of these things we need to bring into these features into what we are doing. So market has opened up, market has grown, the penetration, relatively speaking, hasn't gone anywhere. The brands are under stress. People don't trust insurers. Last year, if you look at the IRDA figures, health claims worth 5,000 crores were rejected. So it's all creating a lot of negative energy in that space. But the key message, and again some bad news I want to bring in, rather than talk it and regret later, I would rather bring it up front. Something that I brought out in my previous kind of presentation as well, and that's climate. And Mr. Devidas, you left that thought as your kind of closing message after Anamika's speech. Climate change is one of the biggest things that needs to be addressed by insurers. So far, insurers have played hand in glove, if I may say, with the industry or with whatever was required. We've been always passive and submissive. We've not been thinking what is good for society, what is good for sustainability. And unfortunately, we've let that take control of us and kind of abdicated our responsible ways of dealing with some of these forces. So what is really happening? So basically, if I just scribbled a few things as I was commuting this morning, and basically one is lack of awareness. So an author I know personally very well, Amitav Ghosh, has been writing a lot about climate change. His latest book, The Gun Island, is a fiction around climate change, and many of you who love reading, I would strongly recommend that you please read that book. It's a lovely, light reading, but with a deep meaning, and it will kind of draw you into the challenges which we as a society and we as an industry should address. So what's, every day we read stories about something going wrong. Fires in Australia, fires in California, floods in some part of the world, Venice underwater, Arctic, the ice melting, the glaciers in Hindu Kush and Himalayas shrinking. So it's all bad news coming all the time. And where it flows from is basically all the carbon dioxide and some of the toxins that we release because of our lifestyles that is impacting the world and the environment around us. So the Paris Agreement was something that came in 2015. What was it trying to achieve? It was trying to bring down the carbon dioxide levels or the carbon dioxide emissions, and also to ensure that the temperatures don't rise beyond 2 degrees centigrade from the time the Industrial Revolution happened, whenever it happened in Europe. But that, unfortunately, has been a challenge. Why India must act and why Asia must be aware of that is basically after China and America, India is the third largest polluter. We pollute, despite our industrial levels and our levels of economy, we are one of the largest polluters in the world. We have so many people living in many lifestyles which is impacting the global ecology. And as the per capita income increases, as our lifestyles become luxurious and richer, we will be emitting more and more of these damaging triggers, including carbon dioxide. So India will be prone to, despite being not a rich country, despite having this disparity, we will be one of the most vulnerable to what we try to dismiss as NatCats, or the natural catastrophes. So we blame it to natural catastrophes or act of God, but actually these are all act of men rather than act of God, which we conveniently blame to someone upstairs. The Arctic ice is melting. Last week and fortnight, there's been a lot of debate and news release about Bombay going underwater by 2050. So, none of our planners or managers, whether these are politicians or bureaucrats, has even woken up to it. If 2050 is going to go underwater, is there any sense in, building new projects? Some of them are underground, whether it's a metro or whatever, coastal highways. Who's going to it? Whose service will it be at when that's going to happen? Whether it's a reality or not, nobody has woken up and contested it. Rather than that, we should be proactive. Maybe the insurance industry should also come out and participate in that dialogue. Otherwise, despite penetration that Anamika talked about and very validly flagged it off, what is it that we will be creating in terms of assets for insurers? Increasingly, as Amitav Ghosh and many other scientists have also shown, because of the rising sea surface temperatures, there'll be increasing wind storms coming from the Arabian Sea side. All this while the storms and hurricanes generated on the Bay of Bengal side, but because of this changing dynamics, there'll be increasing pressure from windstorms getting more frequent and more severe. So one scenario that has been, and I don't want to scare you, but this is a reality we have to wake up to. So the one reality is that the Bombay or the Greater Bombay has 2 nuclear plants, and we have a Fukushima kind of a situation sitting here. If the windstorm is so strong and it damages some of these sensitive installations, we could be another Fukushima waiting to happen. But this is not fiction. This is not science fiction either. This is the potential reality we have to deal with, and we have to fix it. Otherwise, flood or no flood, the storms could make Bombay unlivable even much before 2050. So what, as risk managers, can we do? Insurers do 3 things. One is risk management, other is transfer of risk to themselves, and third is investing the float that Anamika talked about into various forms of mechanisms. Now, globally, insurers are being blamed, and 2 camps have formed. One is the European insurers. So about 17 of them have come out of insuring fossil fuel. So anything that emanates or releases carbon dioxide is bad, and they are consciously coming out of it. But the American insurers and reinsurers, unfortunately, are on the side of the fossil fuel, and a lot of pressure is going on with Greta Thunberg, about whom I talked the last time, the young Swedish lady who's just 16, Swedish girl, who's just 16, was an American, kind of vitalized and generated a lot of activism in the US, and people have woken up to the not just dangers, but the existential issues coming from climate change triggered by America to fix that. So the whole insurance industry now is in a tizzy. So you have 2 camps, as I said, the European and Americans. Asians are still confused. We need to fix it, because more and more natural catastrophes are beginning to happen in Asia, more and more economic activities here, more and more investments will come into India, and we too will be vulnerable. We have the most number of polluted cities. We've seen what is happening in Delhi. Every every 3 minutes kills a child in India because of the quality of air. So what will health insurance do? First, we need to own the larger challenges and bring in some risk management, and then, top it up with health insurance. So just doing health insurance in isolation would be a kind of a self-defeating process. The carbon footprint needs to be controlled. So this is another new language that we need to imbibe in the insurance business. Diminishing trust. Increasingly people are questioning even companies like Amazon because of their supply chains. From where are they buying their finished products that they sell is also under a lot of question marks. So Jeff Bezos may be number 1 or number 2 richest man, but not many people continue to respect him. As I said, the young kids, including Greta and all, have unleashed the Extinction Rebellion, and I think insurers should participate with that. Many insurers in Europe have started doing it. Many insurers, even in a small country like Australia, have started doing it. There are new risks emerging. So it's we can't today look at risk in terms of property, or in terms of health, or in terms of auto, or in terms of the way we have traditionally bifurcated all of them. These are all cross-class risks that are emerging. These are risks which are widening themselves in terms of geography. Multiple countries are involved. If I take you to the third pole. The third pole is nothing but the Himalayas and the Hindu Kush region, from where a lot of rivers emanate, which not only flow into India or Pakistan or Bangladesh, but also Burma, but also other Southeast Asian countries like Laos, Cambodia, Vietnam, the Mekong Delta, and many rivers like Yellow River and Yangtze in China. This supports a population of 2 billion. Imagine the icebergs and the glaciers in the Himalayan region kind of shrinking, and what kind of risk these will pose to the health of people who live in the catchment area, to the very survival of people living there, and to the businesses and the agriculture, and the kind of displacement of population. We saw that in Syria, a small country, just a small displacement of about 2 million people caused almost a world war. And today, we are talking of a population of 2 billion. So there are a huge amount of triggers coming in, and we can't be mindless to all these triggers. We saw what happened in RA. Now, last week I was talking to a forum of law association, and then I said, this is a very unique situation. RA did not, the boardrooms are now moving to the front lines, and the front lines are coming to boardrooms. So this will trigger a lot of D&O losses, and people will, while the Companies Act has made class action a possibility, but sooner or later, this possibility will become a reality, and people are becoming so aware and conscious. There were trees which were 200 to 300 years old which were chopped, and there was no engagement with people. On the contrary, the Delhi Metro was a classic example where the chief executive engaged with people in areas where the trees had to be chopped or transplanted to other areas, and had a consensus before taking that action. So you can't be callous. We are a democracy, and we increasingly will have more and more millennials coming into the mainstream. You can't just push away things brutally without engaging them. And we need to be also mindful of what it will do to us. So ESG, which is another jargon so far, we have to wake up to that, which is environmental and social elements of governance, which is making things increasingly difficult for people owning and running businesses. And you can't be mindless to what is happening to the environment and what is happening in the society at large. So thanks to that, globally, 2 other things that I want to mention, which we need to increasingly get aware. As I said, insurers not only own risks and transfer risks to themselves, but they also invest. So there is something called principles of sustainable insurance. So insurance also has to have sustainability, and sustainability goes back into the yin and yang. So we can't be just aggressive to build business models, and some of the companies that Anamika and I keep talking about are extremely aggressive and short-term. You can't have short-termism, even though our contracts may be annual, but we have to be sustainable. We have to do businesses in ways where trust and sustainability go hand in hand. So unfortunately, both principles of responsible investments and principles of sustainable insurance is something that we are not addressing to or not aware of, but we need to address that. A lot of assets that we are creating, which insurers are investing and covering for long term, like a lot of projects that we insure for long term, are decennial projects. Many of these projects could become stranded assets, and that could become a huge liability for insurers and reinsurers. There's something called climate bankruptcy that also need to come into the insurance parlance. So currently, the first case of climate bankruptcy happened in California. A company called PGE, which is power and electric generation company, had to go into bankruptcy because of the big fires that, because of global warming and climate change in California, triggered fires, and they couldn't take the class actions that are coming their way, the suits that are coming their way, and the kind of it's almost $30-40 billion worth of liabilities already on them. They can't deal with it, and they've shut shop. So more and more of these incidents will happen, and insurers would need to deal with that. A lot of investing entities, whether these are VCs or private equity, are now forcing boards, including insurers, to move their investments from non-sustainable business to stop doing non-sustainable business. And this, it's a matter of time as Indian market and financial services and insurers evolve. We'll have more and more VC and PE activity in India, or both in insurers and broking, and they will want us to behave in a sustainable way and demonstrate that the boards understand that, and the management teams and the front lines are all fine-tuned to them. So we are seeing a lot of change. So the redlining is another jargon that has come into the insurance parlance. A lot of properties, you would have seen what is happening in Australia, in and around Sydney, or what's happening in California. Increasingly, while we are talking of penetration, insurers are exiting from a lot of properties, and including even things like D&O insurance, because they find certain businesses and professions to be highly vulnerable. So they are exiting those businesses. So that's redlining, another new phrase that has come into insurance. We have to also ensure that whatever we do, we ensure that we decarbonize it. So that's another phrase that will come in your lifetime and our lifetime, and we need to deal with that as regulations force them down our throat. So I can go on and on this, but again, to sum it all up, we are in a business which is essentially a business of continuity. It's a business of trouble. It's a business of trust, and a business of trust, despite a short-term contract, cannot be a knee-jerk relationship. People will remember you. People may move their insurances from one company to the other company, but they may continue their relationships with the intermediaries. So intermediaries will continue to play the role. And as Anamika rightly said, while IT is one thing, digital is another thing, and that will facilitate a lot of flux. Clients will increasingly look for business models which are sustainable, which they can trust. So ladies and gentlemen, I come back to the yin and yang. So at this point of time, we are seeing only a unipolar yin-yang model. What we need is a bipolar or a tripolar model which balances everything to keep it sustainable. So while it's important to grow our business, to push into new uncharted territory, to honor the contracts that we've entered into, it's also important that we honor the planet and the ecosystem we live into. We have currently hacked Mother Earth and the ecosystem. We need to fix that. And as someone said in one of the important reinsurance rendezvous in Europe, Greenpeace was demonstrating outside, and they said, what is going to remain to be insured if, if we destroy this very delicate ecosystem that we continue to damage on a day-to-day basis. So with that, I'd like to thank you, but kindly bear in mind not just the need to grow our business, but the need to grow a sustainable book of business, not just within the insurance framework. We need to review and revisit how we gather and process the world around us and be sensitive to the larger environment. Without that, we will all be unsustainable. Thank you very much.
Insurance business is aggressive and also the trust. Then insurance business is a contract. It is required a smart contract. Principles of sustainability is required in insurance business and investment point of view. Investors are requesting insurers to come out from unsustainable investments and unsustainable contract. Then impact of climate change, pollution, environment situations. Then role of risk managers, of course insurers, and role of reinsurers. Then talk about insurance penetration, customer-centric, affordable products. Okay, these points are very valuable points. Hope these are very interesting. So thank you, sir, for explain all these things. Interesting points to Sir. Okay, thank you, Sir Praveen. Now, 5 minutes break. Then we will start panel discussion. No, we can start. Okay. Now we will start the panel discussion 1. Within few seconds. In India, insurance industry is regulated by IRDA. They are responsible for licensing of insurance companies, TPA, agents and brokers, and ensure orderly growth of insurance industry. All the health insurance products which are launched in the market have to be filed with the regulator. They also play a role in handling customer grievances. As a regulator, they have extreme powers to change the growth trajectory of the health insurance industry, government bodies and other institutions. Yeah.
No one will be able to.
Okay.
Thank you. Sorry.
Okay. Can I repeat?
No problem.
Now the first panel discussion, how all stakeholders can collaborate to reduce the health insurance ratio.
Panel discussion number 1, how all stakeholders can collaborate to reduce health insurance claim ratio. In India, insurance regulatory is regulated by IRDA. They are responsible for licensing of insurance companies, TPAs, agents, brokers, and ensure orderly growth of the insurance industry. All the health insurance products which are launched in the market have to be filed with the regulator. They also play a role in handling of customer grievances. As the regulators, they have extreme powers to change the growth trajectory of the health insurance industry. I invite for the panel discussion Mr. Chintan P. Mehta, please. He is from AHI Insurance Brokers Private Limited. And Mr. Shishir K. Singh, Family Health Plan Insurance TPA Limited, please. Mr. Yashas Sambat, Advice Tokyo Insurance Brokers Limited. Please, Mr. Sambat.
Very good morning, ladies and gentlemen. Good to see such a close user group, unlike different summits in India where you have massive numbers, and what you want to address as a key subject area, then it gets diluted. As Anamika and PG have set the tone about the need of the hour, the sustainability, and somewhat started on a negative note, but that itself is a harsh reality. And I think this is one of the major topics where we are on such a path of the road where either we take a U-turn or we decided to move further and reach to the eventual mile which will keep everybody healthy as well as wealthy. Okay. I would say health is wealth is a mantra which everybody wants to follow. And I'm sure individually each one of you would want that health is wealth for you. Isn't it? Do you agree or not? Yes. Okay. But health is wealth is unfortunately not the current scenario for one of the major and the biggest stakeholder in the market. And I would say that's the insurer. And we have been all over the years trying to just have a blind eye to this key topic, that how can we make the stakeholder wealthy, and which is a need of the hour. We had a topic, we had a man talking about a senior citizen product, and we had an answer that it will take some time to come over the period of and have a logical product coming onto it for a senior citizen. I think the problem lies with we all the stakeholders, and let's first try to identify where the problem is lying, who are the key stakeholders in the market, and then try to break it into each stakeholders how they can contribute to make health indeed a wealth.
Yeah, thank you. Good morning, everyone. If you allow me to take a little macro view, like how all stakeholders should come together, I would like to talk about why. Why first? Because as we know, there is tremendous amount of trust deficiency in customers' mind. Yesterday I was with some friends talking over tea, and when we discussed that, this is the panel discussion I'm going to be part of, their first reaction was, यार आप लोग claim तो देते नहीं हो, और अब आप conference कर रहे हो, panel discussion कर रहे हो कि how not to give claims. So this is this completely shocked me, that if this kind of trust deficiency is there in the market, if this is the way my consumer is going to look at me, how we are going to be a profitable industry. If we look at sales and sales and claims, yin and yang, as sir mentioned, at the time of sales, we all are like Shah Rukh Khan of Deewana, Dar or Bazigar. We go to any extent, we follow, stalk, hound the client to get into the business. Once he agrees to us and he issues a check is honored, then there is complete vacuum. At the time of claim, when he needs us, and customer thinks that yes, Shah Rukh Khan will be there greeting me, waiting for me, and at that point we suddenly become Amrish Puri, and our first question will be, kitna kama lete ho? So this is how, if we are going to take it, the problem, as ma'am mentioned, of lower penetration is not going to be solved. And at 0.7% penetration, if we think that we control everything, we control loss ratios, and we make this profitable industry, it's not going to happen. Because biggest drain here is the fraudulent claims. If we talk about health industry fraud, some kind of fraud is there in more than 90% of health claims. And that's why, as Sir mentioned, there are about 8 to 10,000 crores of claims rejected, health claims rejected last year. So this is the place, this is the forum where we should consciously understand and agree that yes, this is a problem. With this kind of loss ratios, no company can be profitable. If we need to be profitable, we need to increase penetration. If we need to increase penetration, there should be change of trust. There has to be trust in the consumer's mind. So this brings us here that yes, we all should come together and all the stakeholders should talk, discuss, because if you look at our industry, everyone is doing a bit, but we are very communally insensitive society. As we talk about Mumbai, Mumbai comes together at the time of calamity. So on the day of calamity, you will find every Mumbaiker helping each other. But what about 364 days? Similarly, every company, every stakeholder in the health industry, health insurance fraternity, is trying to do something to reduce the claim ratio, to control the claim ratios and to control frauds basically. But if we continue to do this in silo, this is not going to happen, because this is kind of a wildfire. I cannot be sitting in my home with all the firefighting equipment that yes, whatever happens to the village, I'll be safe. This is not going to happen. So this is the place where we should, all the stakeholders come together and let's discuss how it should be done.
Thank you, Mr. Mehta, for setting the note. Mr. Singh, your views to take this forward.
Yeah, morning everybody. I represent a TPA, and we all know that claim ratio or the loss ratio is a huge problem nowadays, and every stakeholder is trying to do something. As a TPA, probably we understand it better than anyone else, because mostly responsibility lies with TPA. No, but what I feel, the measures which we are trying to take in the past 5-6 years, these measures are not working. So it means there's something else. We need to go do some out of the box kind of thinking. But what I feel, out of the box thinking can happen only if you know box fully well. Most of the times we think that out of the box, so somebody who doesn't know anything, he will come and he will give some ideas which will be workable. It doesn't happen that way. If you just listen to some of the figures, probably that will throw some picture about the industry. Today, size of the industry is around, health insurance industry is around 40,000 crore. Out of that, almost 50% is the corporate business. Almost, I can say 20,000 crores. Then retail business is around 17,000 crores, 16,000 crores. And then these are the mass policies. Coverage-wise, almost 3 crore persons are covered in retail market, 8 or 9 crores in corporate market, and then mass policy I think we should not even discuss right now. You will be surprised to know one of the figure which Madam has said. I will just endorse that part. By these figures, if we look at per person premium, for a retail policy comes around 4,500 rupees. And for a corporate, it comes around 1,900 rupees. And what all facilities you are providing to a corporate customer and what all facilities you are providing to a retail customer is well known. Okay. Somehow I don't agree with you what you said that 90% cases are frauds. Yes, fraud cases are there. And it is our job. Approach has been that we need to find, or it's more of a policing kind of approach, that if we catch this fraud cases, things will improve. But this is not the only thing. These figures which I have discussed with you, these figures throw some light on that. Now, claim ratio wise, almost 70% claim ratio is for retail policy. For corporate policies, it is 110%. So one way, these guys who are giving business to us, whose loss ratio is also less, they are subsidizing for corporates. So one way to improve situation is, for I'm too small to comment about any insurance company, to increase the retail business. If retail business goes, like Madam has also said, that penetration is very low. 3 crores covered in the retail policy is very small figure. So scope is very high, but the problem is in retail policy, this is basically agent-driven market. And personal selling, we all know, is one of the costliest way of selling. Unfortunately, if you look at any industry which is profitable, you will find strong brands are there, strong product brands. And if we talk about our health insurance industry in retail side, there is only one prominent brand, that is Mediclaim. And Mediclaim means what? United India, National, Private Insurer, it means so many things. So there are no focused brand on the market, as ma'am has said that one of the products which she has launched in one particular market, which is doing very well, maybe because the need of that brand and then brand the way it is advertised. So what I feel that if we can look from that perspective, apart from other things which we have been doing, like GIPSA rates, and then more investigation verification, then cappings on disease and all. But if we look at the branding part in our insurance, probably that may be a solution. That's what is my thinking.
The panel, I would like to just ask you, before you discuss also, when you said that we do not pay claims, I think that's a wrong statement.
Yes, ma'am.
Number one. Number two, you also mentioned, Chintan, about trust factor. People don't trust. Now, you must tell us, because at the end of the day, we expect our partners like brokers, agents, banks to tell us where is that trust deficiency. If you can tell us, we can correct ourselves. Where is the trust deficiency? Can you explicitly tell us? Because it's a very generic statement that people don't trust you. Fair. मान लिया बात, लेकिन how to rectify it?
Okay. To both the things I'll answer. Like, as I mentioned, 90% of the claims are fraudulent claims. What I meant is there is some kind of manipulation, okay, is also considered as a fraud. So, if we look at fraud, deliberate fraud or opportunistic fraud, if a patient should be recovered within 2 days or 3 days, if he stays 1 day more, okay, and 1 day billing is added, then it is a fraud.
No, it's not a fraud. What you meant is exaggerated hospitalization cost.
Yes, it's a kind of fraud. It's a kind of what you call moderate fraud or mild fraud, whatever you say.
It is not fraud. Let's not use that word. Fraud means when there is no claim and you are claiming, when you are not insured without a so-called photo ID and I get admitted instead of my sister, that is fraud. But what you are saying is an exaggerated thing, and for that, in that ecosystem, we have hospitals to blame also.
Yes, agree. One of the stakeholders is the medical system. And being a non-practicing doctor, I know that what kind of frauds happens there. So, word fraud looks bad, but yes, this is how international markets see us, as an opportunistic fraud. About the trust deficiency, whenever as an intermediary, when I talk to my team, or when we convey it to our customers, that every genuine, ethical and legal claims should be honored. So whenever, let's say in terms of motor, we get so many falsification of NCB cases where we don't represent only. That is a kind of fraud where we tell our team that we should not represent. And IFFCO was the first company who went into the last 5 years of history of client and made them pay for that whatever NCB falsification claims they have done. Generally, till then, industry was doing only last year's, looking at last year's NCB. So.
I haven't got an answer from you when you said trust. It's a very grave statement you have made. And actually you have marred the whole industry. But let me, for the House, ask the House in this, because it's a very good topic of, I think the topic said, how do you want to bring down how all stakeholders can jointly bring down the loss ratio. That is the topic of the discussion. Now I'll give you some statistics to the House. And my friend from FHPL can say yes or no if my statistics are right. Typically, in health claims, if you look at, I'll take the group first, because what is bleeding is the group health, not the retail health. And let me also tell you, mass health is well behaved than the group health. Mass health is far better a risk than the group health. Now in group health, if you are covering maternity and if you are covering your parents, then 56% of your claims come from your parents' ailments. And then there is maternity, which is about 19 to 20%. So what happens, almost 80%, 70, almost you can say 60 and 20, 80% are ailments which are not ailments at all. Either they are geriatric care issues, and there is maternity, which is a process. It's a life process that we go through. Now the third and the last 20% is basically real problems where you meet with an accident or your child has a problem, so you go to the hospitals. Now FHPL can tell us that if I understand, and having lived abroad and worked abroad for some time, what we see here is that either we change this pattern of GMC. I don't know, we tried once when I was in my previous company saying, I will service your all claims irrespective of what the ailment is, you just give me a service charge. Automatically they'll come down, because today no, what I would say, purchaser of insurance, which brokers will say, want to give money where they are not making money in the terms like, if my premium is X rupees, I must take claim of X plus 1. I think that is where the problem is. It is not really hospital so much, because if I look at Satya, I forgot to give you another statistics. If 17% of the claims remaining which I spoke about comes from infectious diseases, can this be controlled? So therefore I would appeal to my broker friends and the TPA friends that when we negotiate and we are talking to our group customers, how do we present ourselves? Do we present ourselves as loss minimizers and helping them to save money? If today the claim ratio comes down, the corporate themselves saves money next year by paying less amount. So how do we do? So we as an industry gave group health policy on a very wide canvas. So can we have the house tell us how we can modify this whole presentation of group policies? Should maternity be covered? Isn't it a process? Should we not advise them why you want a maternity cover? Can maternity be taken out? Can health policies be really for health? Can we top health policies with critical ailments to a greater extent? So we'd like the broking fraternity to tell us, because they are the ones who are handling maximum group policies.
It's a very valid question, and I think this is, we can say that if we answer these questions properly and get this implemented, then overall industry will change. One of the things which ma'am you said is the trust deficit. Unfortunately, perception becomes more important than the reality today. Everybody says that most of the claims are rejected, but if you look at the statistics, less than 1% claims are rejected. Okay. In general, like the discussion which was happening, that he has also said that general impression is there. Because ma'am, what happens, we as an industry, when claim ratio is 107%, it means that we are paying a lot of money to the members. But we do not tell it to the industry, we do not advertise about it. People are not even aware. One person in our industry, you pay 99 claims, one person claim is stuck because of some reason. That creates more noise than the 99 guys who are satisfied. If somebody is satisfied, he will never tell anybody. He will just keep quiet. But if somebody is unsatisfied, he will create a lot of noise. Second part, ma'am, as very rightly you said, that in any corporate, almost 40 to 45% claims are maternity claims. And then we are trying to say that we are covering risk. Maternity is not a risk. It's a certainty. And in retail policy, all these things are not covered. If 45% of the claims are maternity claims, this is the biggest problem. And very rightly you said that if we can address this thing with the corporate. Now corporates, I'm sorry to say this thing, I hope none of them are present here.
Even if they are.
Throughout the year for running the policy, we all talk about global standards and all, that our employees should be treated like this, our employees should be treated like that. But at the time of the negotiations of premium, probably they can beat any Chandni Chowk Lala. Now here we all need to stand up. Now the problem is, if one insurance company says no, others takes it up. So they are always having options. So somewhere, I have been hearing this thing for almost last 10 years, that market correction is happening, now others will not take, but I don't know how long we will continue saying this thing without doing anything.
May I have one question, please?
Yes, ma'am.
Anamika Plaza said very correctly that how the broker fraternity can help it. And it's a very vital question what she has raised here. See, one thing what I have seen, there was some saying that the stay in the hospital was delayed, or it will be instead of 2 days, 3 days. I'm very sorry to tell here one thing, that I have gone through many cases where it has happened that because the cashless has not been approved, the patient has been asked to stay 1 more days. And at whose cost? At the cost of the insurance companies. Why we cannot look at it? I do not understand this. Second question, yes, why in GMC we are just giving the things, it's not a underwriting, I am telling you the portfolio is undercutting. And it has been seen as a bouquet. That because he is paying me fire premium so much, he is paying me engineering premium so much, so I am giving here this. See, each and every department, each and every segment is having its own thing. And third, very vital, I am always telling, and I have raised this question even to IRTS some time back, that why don't we have the policy saying what is the exclusion in the policy, that's all. Why do we have the avoiding that bypass and confusion in the policy? Let our policy be very, very straightforward. These are all the exclusion, everything else is paid in the policy. And I don't think so. If such kind of product is available in the market, then even there will be the common people will also not tell us that the claims are not paid. Because what happens whenever the common, even the health insurance policy, we say the claim is not payable, we are not able to justify. We say no, it doesn't fit here and it doesn't fit here. That's why we are not paid. But why don't we have that exclusion-based policy? And I think that should be the correct thing. So here, if we want to minimize the loss ratio, everybody has to work together. Like as I said, the TPA must be prompt to see that the claim settlement, cashless has been approved immediately. And if the patient has to leave by 11 o'clock, he has not to wait up to 2 o'clock and 3 o'clock and pay 5,000 or 8,000 more for the room rent. And together with the room rent, so many other things are coming. So here, one thing is very serious about it. Yes, we need that GMC should not be a policy where it is a bouquet. It should not be taken as a bouquet. General, this health is having its own fraternity, its own way of working, and it should be worked like that. And the third thing, our product should be such, very simple, very easy, that even a common man understands कि मुझे को इतना disease होगा तो पैसा नहीं मिलेगा, बाकी सब जगह पे मिलेगा. If these three things are there, I feel that we can do the best.
And question क्या था that we forgot?
My question was this. My question was not there. I just wanted to say that he said that there is a delay and there is a overstaying in the hospital. So that's
the regulator, it seems, has heard you. Standardization of health wordings is on the cards, and that is one step towards having a more of clarity of thoughts and clarity of understanding as what the health insurance product is. Let's now go to the crux that first, who are the different stakeholders which we are talking about. We spoke about TPAs, we spoke about insurers, we spoke about intermediaries. But what we have listed down as a panel, and I'm sure the House would also agree to it, there are far more key stakeholders. One would be the government on an all India level is what we talk about. We talk about service providers, that's the hospital, fraternity, the diagnostic centers. We talk about the investigators, we talk about the regulators, we talk about education bodies who promote education and different knowledge sharing, And we also look to a part as social media as one of the key stakeholders to ensure that this objective of controlling the claim ratio comes to a reasonable level. If we got to start with government, and I would not want to debate too much on this considering the limited time being, somewhere down the line, sorry?
You have no control on the government.
Precisely. So where government has started of late has been to promote a self-insurance model, which it is giving it to the different states that whether you want to look forward to an insurance company model or alternatively look to a self-trusted model and only a fixed layer of insurance goes to the insurers and beyond which the upper layer goes to the trust to manage it from their funds. So somewhere on a macro level, it is already coming into the thing that why not go for a self-insurance model compared to a insurance-driven model, and corporates in India are also looking to that as one of the practice that itself, that why can't we do a self-insurance and appoint either a TPA or a healthcare provider to manage it. Then itself it's a natural death of a group product which is on the cards. The other one which we are talking about, insurers, okay, I think insurance industry, if you would have heard in the recent media, is collaborating with the TPAs, and for fixed 4 to 5 ailments like angioplasty, your cataract, is coming up to a consensus of having a fixed package rates and trying to bring about the hospital lobby to agree to it. You have programs in mass government schemes where a hospital fraternity looks to a cost of treatment at 10K, and if it goes to a private client's policy or an individual retail policy, the same treatment cost is available at say 30K or 40K. So somewhere down the line, a standardization into the cost of fixed treatments and the industry has to come together. First at a regulatory level and at an insurer level, that come what may, any of our programs, whether it's retail or a group, we will not pay beyond this. Let the insured be the self-insurer for that excessive amount. That would be the first step to get about a standardization. You in cities like Bombay, you go for a bypass, you have bypass being available at 3 lakhs rupees also and bypass being available at 38 lakhs rupees also. And if the underwriter has issued a fully loaded cover, you have no areas of rejection. And there is not at all a single pie where an insurer can deduct it or a TPA can deduct it. So are we having some thought process that I would want to cap it? If I want to have a senior citizen driven product being coming in, where they are predominantly prone to such major ailments, where are we heading on to have some standardization of cost of treatment to make it affordable for the insurance fraternity to underwrite that portfolio? Predominantly we are not acting like underwriters, we are more acting like undertakers into the group health portfolio. Retail, you are seeing long-term policies coming in. Has anybody even thought that in group I can have a long-term? Corporates demand it, but they want the premium of the services and the white-collar treatment. There's a price to it. You want all sort of wellnesses being given by the underwriters to get the business. And then intermediaries come forward and talk that I can give you ABCD treatments, I can give you red carpet treatments, I can give you blue carpet treatments. But there's a cost to it, right? And it is our own public money which is coming into it. We can't have a motor scenario coming into health, what we had in 2009 where promoters had to fund in a huge pie of money to ensure that the solvency margins are maintained. The second being on the TPS. Okay, somewhere down the line the TPA has been doing this role over almost decades of bringing about standardization of cost of treatment, controlling the fraudulent element, and at the same point of time you are having private sector having their in-house TPS, also promoting it. And therein somewhere the trust factor comes into the picture. The intermediaries or the PSU insurers go and say that private sector के पास है, in-house है, तो claim काटेगा, उसके पास power रहेगा. PSU बोलेगा हमारे पास एक्सटर्नल TPA है. प्राइवेट बोलेगा कि PSU में जाओगे तो फिक्स पाव ही मिलेगा ट्रीटमेंट में, जिप्सा PPN. प्राइवेट बोलेगा मेरे वहाँ आओगे तो सब कुछ मिलेगा, मेरा प्राइस खाली 5 या 10% ज्यादा है. So there is no consensus or a unity which we see at a macro level among the key stakeholders. What we see here, there are insurance foundations available, we have III, we have IBAI who is a part of this event, we have insurers who are part of the event, brokers who are part of the event. Are we coming on to first a predominant consensus that we all 5 or 6 stakeholders will go to the regulator and say that come what may, will not undercut, or will stick to this cost of treatment? The others on education bodies, you have people from CII also here. They play a big role in promoting various research reports, practices in India and abroad onto their social forums. You have institutes like NIA, III, where you have the next generation of insurance fraternity coming in. सोच तो बदलनी पड़ेगी ना, नया जनरेशन का सोच ही नहीं बदलेगा तो आगे का सेक्टर का होगा क्या? So we require the education bodies also who are present here and not here to come forward on to addressing the larger topics. 40,000 crores poised to reach to bigger heights with more of Ayushman coming in and more of awareness coming in. What Anamika spoke a while before is a variance of your individual critical illness product, and that itself is making it affordable for people to relate that I have my illness available. And the next topic on social media will probably touch base on that. So how much, why has that thought come in? Because आज तो लोग लेते ही नहीं है health insurance. Yeah,
that's right, Raheja.
So predominantly, while we talk about it, this is a never-ending topic, and it can go on and on. When we speak about corporates are into the driver's seat still. The subsidy has gone away to a significant extent. It is claims plus now is a new trend. But for some underwriters where to accommodate might be writing off a certain pie of their profits to get an overall larger pie. But is there somewhere something how it has happened in property or how it has happened in motor for a third party, that if I want A, B, C, D, E health covers, whether I am a retail customer, whether I am a corporate customer, if I go to company A, which is a PSU, or whether to company B, which is a private, my fixed cost of insurance would be bare minimum this much. You saw what Mr. Singh mentioned, the variance on average health cost premium, 1600 to 1800 for a corporate to a 4500 for a retail. That's why you have underwriters supporting channels with aggressive marketing costs, because they know the money lies into the retail piece. Why they are not running after group? Group is a strict no for majority of the underwriters now. It's only claims plus. So where is the balancing act? It is only retail which is balancing the pockets and the losses of the corporate pie. But corporate would eventually also would require, and I would put this on a note that don't be surprised, unlike many markets where you will have corporates funding a fixed amount into their employees' salaries. This is my portion of the cost to you. You take care of your own insurance. Corporate insurance might have a natural death coming up over next 3 to 4 years time, the way the trends are going. Earlier you had a fully loaded cover with parents-in-laws and all. Then you had cappings. Then you had co-pays. Then you had deductibles policies. Now you have benefit-based policies and restricted policies. And then the confusion will arise that मुझे तो मालूम ही नहीं कि मेरी पॉलिसी क्या कवर करती है, और उसके वजह से टीपीए के क्लेम रिजेक्ट होते हैं. टीपीए की क्या फॉल्ट है? इंश्योरर का क्या फॉल्ट है? जिसने खरीदा है उसको आज तक पता नहीं है इंश्योरेंस क्या मैंने लिया है, और जो बेच रहा है वो बेचने के लिए बेच रहा है. So therein the education bodies have to step in. The quality of training to impart, to push this product to the masses has to come into the picture, and we need to consensus and collectively move further to address to this larger issue. It's a need of the hour. Health insurance will continue. You ask every Indian that will you pay a premium of 10 years together, the answer would be yes, मेरे को आप फिक्स भाव बता दो. तो उसका solution भी एक प्राइस कर सकते हैं. And if collectively we come together, again I'm emphasizing on the word collective, then only we can address to this problem. Mr. Mehta, your thoughts?
So cost, quality and outcome. These three things are crucial, and this can be sorted only with collective efforts. So this is where we should all stakeholders come together and come on a same platform to try and address this. Thank you.
Mr. Singh, your concluding thoughts?
There's just one last thing, which was a very good thing also. You said that what TPA can do. Most of the times it is left to TPA only after everything is decided. He is never part of any of the meetings of renewal. And when everything is decided, then he is called that you need to bring claim ratio to 90%. Second thing is like, which is the industry fact, that if you look at the TPA industry, this is a industry which is for a player like us, it's a declining industry because most of the insurers, they are coming with their own TPAs. And then the biggest of the responsibility is left with the weakest of the player. I'm sorry to say this thing. And we are making this industry weaker by reducing their fees also. We are supposed to do so many things, but you cannot get anything more than this. So that doesn't leave much of the option for a TPA industry. So my suggestion is that most of the time yesterday I was sitting with one insurer and one broker was discussing about one policy, and they said, insurer said that this is the base premium, over and above you decide what will be the commission for you and fees for TPA. So if we want to like grow, if we want to use the TPAs properly, then we need to strengthen them. Thank you.
Retail policy claim ratio is 70-75%, and in corporate policy claim ratio is 107, 115. How can we reduce the claim ratio in corporate policy? You are not capping there. You are mostly capping is must compulsory or not?
No. I don't agree to what Yash said.
Every corporate policy, the policy placement time, there is no any capping. The claim ratio is high every day, every time, 101.
As rightly mentioned by Anamika,
at the placing of policy time, the insurer and broker, there's clearly the capping for them. Yeah, any cataract, yeah, maternity. Some of corporate policy, there is no any capping. So claim ratio is every time.
see the price, if the price is a right price, and then it can be, as I mentioned to you, a fully loaded cover right from 0 years to 90 years. I can have a coverage being given and no cappings whatsoever. You have underwriters quoting for that. And if my claim ratios are 115, I can enjoy the honeymoon for one time. I cannot enjoy the honeymoon for the second year again. Yeah. So I will have to pay a price if I want to enjoy the honeymoon again for the next year, and it will be definitely 125 plus, whether it's ex-insurer who has underwritten it or somebody else. And therein, as Mr. Singh mentioned, the gap of that 2, 3, 4, 5% would be the brokerage cost or the management expenses cost which the underwriter is taking, including the inflation, or the TPA fees. And therein some other intermediary or underwriter will come and pick up the business and say, I am quoting you 10 lakhs cheaper than your competition, give the business to me. So there is per se not a answer to it that why it is at 115. It can be 215 also. Or it can be 50 also. I can give a very classic example, and not endorsing IFFCO TOKIO. It is one of the public sector's policies through other intermediaries, which we approached IFFCO TOKIO 2 years back. Okay, and the claim ratio was 100 and almost 30% and we went to IFFCO TOKIO that this is a portfolio which we wanted to be underwritten. In crores the premium was. 95% of the underwriters said that we cannot underwrite such a portfolio, it's very risky. Collectively, involving the TPA, involving the underwriter and the client, we structured the coverage and the program. Next year, we got the claim ratio down to 80% on incurred claim basis after all the claim ratios costs being added to it, and we renewed it again for second year now at claims plus 15%. Because for that sort of a population, the cost of healthcare is always going up. So it is very important to educate to them that if you will not control the cost of claims and you will not involve the stakeholders, they said we want breach candy. We want to go to X hospital there. Underwriter and TPA educated to them that you, by allowing and taking such facilities, increasing your own cost as a group. There is no control to that. I can't go in the current scenario to breach candy and say, cap your cost of treatment. Breach candy has his own thoughts of claiming. and charging. So therein it's a classic case. You have to have a collective people of industry coming together, and it's an individual responsibility. It's not a responsibility of only the underwriter or the broker or the client to go and just keep on talking that we are going to control it. Regulator has to step in. You have to have products which are long-term basis. Had you heard about a health product which is 3 years available before? Now you have 3 years health insurance products available with discounts. That's a step towards that. So eventually you might have a 5 years or a 10 years also long-term health products or a longer tenure. We as an industry have to think towards such costs to be controlled and making it a sustainable long-term running business. Any questions on the house?
Can I just, so I was just listening to the conversation, good one. I have to admit that I'm not from the EB space, but I have done portfolio analysis of all health portfolios across the last 10, 12 years. So some fundamental facts I thought was missing in the conversation. First of all, when we do group medical pricing, normally what one fundamental flaw which happens in our market is it's burn cost plus. That's not how globally group medical pricing happens. So normally they'll have to have actuarial models which gets into number of employees. You can't just you can take a weightage of that particular group's performance, say 30-33%. The rest has to come from the other similar groups that you have been pricing it. Similarly, another fundamental defect which happens is the cost of care in some place like NCR or Mumbai is 60% more than other locations in the country. Again, that factor doesn't get counted.
Now we have started taking that because we get some policy which is coming out from, say, Odisha, some mines. So we definitely give a lower price.
Okay.
So it is now segmented, manufacturing.
Depending on the location, yeah.
And also the industry.
Understood.
The manufacturing will always have a lower cost.
Yeah.
The BFSI sector has the highest cost and the consultants are the highest of all.
Yeah, sure.
If you insure a consultant, it will be same, whether it is maternity here or maternity there.
Yeah.
It will be 30,000 without a gap also they use 30. And here a consultant will use 2.5 lakhs.
Yeah,
so there is a difference, and I think most companies are now maturing to that level where we are able to rate. All said and done, the issue of loss control is the thin price, nothing else.
So one part is,
again that happens.
yeah, so Anamika, completely agree. So one part is the rating factors. The second part is also the disease management factors which has to come into play. So if you look at a group of, say, technically a group of 25,000 employees can be a self-funded group. That's how it happens in the US. So if you're having any employer, we have a segment of employers, right? I mean, I heard you say that it's going to be death bell for group medical. I don't see it happening. The reason being that whoever the corporates which are insuring know that they're passing off the losses to the insurers. So they know the significance of having insurance in place. Here, the way to control claims, if I use my limited knowledge, is first of all, I think there should be some amount of disease management programs which has to come into play. If you have a segment of, say, 10,000 employees, there will be those 50, 60 employees where you have to start looking at how to control their HT and diabetes, because it's going to be a future cardiac or some other chronic disease claim. It can probably get postponed if those segment of 50, 60 people are getting addressed. So that's one of the fundamental things for which data analytics and lot of disease management programs have to start rolling in. The second other factor is, I know a lot of numbers were thrown in terms of penetration that we spoke about. A lot of fundamental changes are happening in our market. See, when I started in health insurance, we were talking about a PMI penetration of 2 to 3%, which is still at that same level. But because of RSBY, the penetration of the market went up to 24, 25 levels. In the last 1 year, the penetration has gone up to 50%. And if you technically look at ESIC and other all financing mechanisms coming into place, we are talking about a penetration of 70% of the market. So there are some fundamental shifts happening in the market which might be similar to other countries that we have seen, where probably the base insurance might become Ayushman Bharat. Why just BPL? I would love to take my base cover as Ayushman Bharat. So when we are managing retail portfolios, see 35% of our portfolio is from retail products, where again in health it's a decaying subject. So the portfolio is going to go through an aging process. That's a very fundamental aspect of health insurance. But there are a lot of things which keeps happening, like demographics of our country is very, very young. So if people generally, I think though we talk about health as a push product, the significance of the healthcare cost increases is well known, at least among the millennials and other things. So in terms of pushing the products, I think Anamika spoke about the mosquito related thing, which is a very beautiful way to top up your base product. So if you have a base product which can take care of some cost containment, whether it's a group medical or retail, it doesn't matter, right? If I have a Ayushman Bharat kind of a cover made available on payment of my premium, that becomes a big base cover with CA and other things topping up the list. So from an insurer's portfolio perspective, that's a very good way to contain the costs. The third aspect will definitely be making the group aware to some extent that they need to have skin in the game. Because as we were talking about retail and group portfolios, a lot of groups have it very easy in terms of, because they always have 20 insurers fighting for the pie. But I see a lot of sensible decisions being taken by the insurers in this segment. So as intermediaries, I think we need to support their the role that they are playing so that sensible rating systems come into place. So these are the three aspects I thought I'll table it to the group. Thank you.
Any more questions on the house? So let's lean towards health is wealth collectively. Thank you.
Thank you all panelists. It's an interesting session. Couple of times divert the topics. Then there is a debate, retail and group GMC, claim related ICR, and stakeholders' contributions, how to regulate, how to control claim ratios. All the points, detailed discussions. We discussed detailed points and good interactive session. Thank you all panelists once again. Social media provide with the platform to demonstrate your expertise, answer questions, contribute conversations, and see your social media results skyrocket. Adding industry news, trends, and your own relevant through leadership into the mix will build your reputation as an industry expert. Next panel, discussion number 2, how intermediaries can market insurance via social media. I invite Mr. Sudhir Joglekar, Mr. S.K. Sethi, Mr. Shiv Tiwari. Mr. S.K. Sethi moderating the. Thank you.
Let's begin this discussion. I have different view on it. Why intermediaries should be promoting the insurance coverage? This is the job of the insurance companies. It is the job of their organizations, whether they call it General Insurance Council or Life Insurance Council. In this country, mutual fund industry has grown to those greater heights because AMFI, or that is whatever they have been doing, they have been advertising and they have been increasing the penetration of mutual fund. what we find is that in case you go into the basic concepts of marketing, where Philip Kotler wrote in his book on marketing management that first stage is the awareness, then it comes to the second level and third level, and then last level is when the customer has decided to buy the product, then the brand equity comes into picture and he decides whether I should buy the product of this insurance company or I should buy the product of another insurance company. For last 20 years, all the insurance companies have been totally on the wrong track. That is, they have been trying to put their brand. My suggestion to them will be that they should take out 50% of their collective money and they should use it for common advertising, or again coming to our point is on social media to increase the penetration of insurance. Insurance intermediaries, whether they are broker firm or IMF or agent or that is, they are getting such a small amount and their survival is at stake. So do not expect that they will put in their effort in putting so much of money in social media, because as we are in this line, we get, and that is small consultants have appeared all over the country and they say that give us 50,000 rupees a month, 1 lakh rupees a month, and we will promote your intermediary firm on social media. So why we should go in for increasing the coverage or increasing the market for insurance companies? It is for insurance companies to do it. So I take example of agriculture insurance, where it is that whatever is the budget, whatever the business has been booked by the insurance companies, they have been told that 5% of that should be spent on promoting the product, promoting Fasal Bima. That is the way it is. So in case the insurance company is selling many lakhs, where it is that life insurance, general insurance, all are in picture, there is that the money has to be allocated by the insurance companies for increasing the penetration of insurance by using advertising or coverage on social media or like that. Then it is that I heard that a lot of money is allocated for the regulator for promoting insurance, and most of the years, that is the last information which I had, was that money is not spent on increasing the awareness of insurance and is returned back to the central government in the form of a bigger check. Why it is happening it? It is for insurance companies, they are having better access to the regulator. That is whether there can be a campaign which can be in the form of advertising, or it can be social media, or it can be something else, and where it is that all the stakeholders should come together. As far as the insurance intermediaries are concerned, I pose the question to my panel members, that is, can you think of the way that it can be done? Because social media is being thought of all by us, all of us is as if that is appearing on the Facebook. I can say that on the Facebook, and that is I have come across some of the intermediaries have put up their figures, that is when they went to Goa to have their team spirit building exercise and all that thing, where that is image is given that and we are doing it. So Facebook has become as a social media where people only want to show the glamour. And it is some insurance company showing the photographs of Diwali and all that thing. That's what is social media is. I do not think that there is I think that there is no way that insurance penetration can be increased by using social media unless and until there is a collective effort. Yes, sir.
Thank you, Seti Saab. Very good introduction. Two submissions. First of all, sir, we are no different from insurance companies. We are their extended arms. So when we say that insurance companies should advertise, I mean, it's same if we do it. Secondly, sir, let me point out that yes, insurance companies do advertisement, but the business happens, sir, is on a very retail basis. For example, when I made one driver aware in my community that he should buy health insurance, last time I had learned in this insurance alerts itself that to have health insurance policy in every pocket should be our dream. I was very much impressed with that sentence, and I started practicing it. And today this driver, when he faced a claim, he was benefited. So business happens there. Insurance companies do, they conduct, and they are our masters. But so to say, again, sir, for social media, I would say there are 4 things. One is contextual. What we, I mean, we don't advertise. Our IRDA do not permit us to advertise. There is no this phone telemarketing. It's not possible. So what options we have is only this social media. For example, this Facebook, Instagram, and most importantly WhatsApp, and so on. So one thing is contextual. For example, case studies, which we do mention. And these case studies probably impress and get us more business. Secondly is conceptual, where we display videos, nuggets, scenario-based activities, so on and so forth. Third is applied, where it goes for gamification and assessment. And last is social, where we have a discussion forum and collaborative quizzing. These everything contributes probably to social media, and how, as you say, agencies or IMFs, insurance marketing firms, how we operate is this way, sir.
The previous session was actually very, very serious, and I thought this would be lighter, but actually this is also getting serious. Let me start by making the session a little lighter than it is now. Let me start with some fake news. Some fake news, and I'm reiterating fake news. Google and Facebook, they have approached Government of India to allow 100% FDI in insurance. They want to set up life insurance and general insurance companies in India. This is all fake, huh? This is all fake. The reason why I'm saying this is they are right now sitting with tons of data that they can leverage to sell insurance policies if they wanted to, or if it was possible. Now let me step a little back and say what is all this social media about, and why it is so potent and everybody is talking about it is because it's all about data. The data that is available on their service, on me as an individual, in a segment size of 1. Typically in marketing, what you do is you define a segment and you say male age 30 to 50, occupation service, business, self-employed, metro, tier 1, tier 2, or you do a second level of segmentation saying owns a car or lives in this particular pin code. That's the typical segmentation that offline marketing typically gets into. With social media, the data that is available, the kind of data that is available, it actually goes down deeper into psychology to understand how is this individual operating, behaving when he or she is alone. Social media is about how the individual is operating when he or she is not being watched by anybody else. It's personal, it's private. It gets into my deeper, I mean, Facebook, Google, they have psychological information about how this individual in a segment size of 1 is behaving when left alone, and therefore it gets into targeting that individual, saying this is the kind of product or solution that might make sense, and this is what gets peddled by all the social media companies to insurers or any product manufacturer or distributor. So that is the real potential and the power of social media, the way I perceive it. Now coming to the basic product that is available to you and me as social media users, as a Facebook, and like rightly said by my fellow panelist, is that people want to really showcase who they are, or rather they want to showcase how they want them to be perceived in public. So what people post is, I was at so and so place. Nobody posts, I was scolded by my boss, unless until he or she wants to really make boss's life difficult. What they post is, I don't like service provider ABC, you are a fraud, you are a cheat, you did not deliver good service. That is what they misuse or abuse for. But personally, at a very personal level, I will post my pictures on Facebook, or put it on my WhatsApp DP, the places that I visit, or friends that I'm meeting for a very long time, or the award that I received, or something great that my family did. This is what I really post. But what I am actually doing beyond of that is not known to people at large, and as a customer, this is what I do it for. The platform that is available, I mean, whether it is Google, whether it is Facebook, or whether it is Instagram or anybody else, the ads that come to each one of us is essentially basis what we have browsed in the past. The browsing history, the segment size of one really determines what is the kind of advertisements that you see. So if somebody was to get access to your phone and see the kind of ads that you're seeing, will tell them what kind of browsing, surfing you are doing on social media or Google per se. Now this is a brilliant opportunity for marketers of various products, and I will say this is something that any marketer's dream would be, that I reach out only to people who matter to me. People who are most likely to consume a product that I have to offer. So unlike the mass media, you take television, or you take print, or you take hoarding, or you take any of the other conventional advertising mediums, there is a very large wastage, because it's reaching out to people who really don't matter to you. And therefore, social media has the ability to make marketing campaigns very, very efficient. And of course, that's the core revenue model for all these social media organizations. Now, picking up on your point, sir, on why should intermediaries do social media advertising marketing? I have been on both sides, both as a distributor as well as on the manufacturing side, and I will tell you, it's a fundamental question as to who is owning the customer. Who is really saying that XYZ or Shiv Tiwari is my customer? So as a distributor, Shiv Tiwari's interests are my responsibility. Who is saying that? If this responsibility is being left to the the manufacturer, then the intermediary is not doing a great job of what they should be doing. Now, can social media be a very effective lead generation platform? I will not make a guess out of it, but yes, it can be, but it can be a very expensive proposition. But can I use the social media platforms to really penetrate the subconscious mind of the customer? My answer is brilliantly yes, and that is what I do as part of my organization. I'm launching a product in a few days' time, and my objective is that I will reach out to my agents, I'll reach out to my employees with the features of my product, and I'm only reaching out to a very limited segment, and I will pitch the product and its features in a particular way that it goes and sinks in the subconscious mind, so that when my agent has to go out and talk to the customer, back of the mind he knows that this is the feature that I need to talk about. When I'm doing the same thing with customers, the customer's subconscious has been primed enough that this is the feature that is something that is really valuable to me. So when my agent goes and talks, the customer is already bought into the concept. All that it needs to say is somebody who's helping there, reinforcing the belief and filling the form and doing all the formalities. So I think from that point of view, it is extremely potent channel and a medium to really go and talk to the customers in a way that it is non-intrusive. So this is where I will leave it, and please ignore the fake news. There is no element of truth there.
Sethi Sahab, I have a serious objection to what you said. You said that insurance companies should advertise what is there for an intermediary to advertise. But I must tell you a little bit about the social media. Insurance companies are all over social media now, and we have a dedicated context, as Shiv just said, or I think you said about context. So if you see, most insurance companies do have a context. Like suppose we launch a product, we actually put the video first in the social media, and then our agents are easier to sell, exactly what Shiv said. But may I tell you, we encourage our partners to go on social media only for their benefit, not for our benefit. The benefit is, especially the broking community, do not represent a single insurance company. They represent a customer. If the customer wants to make a choice, who they should, it can come. Again, the second part of it. The second part of it is, in case suppose somebody is on social media, even say for a part of us, let me tell you, there is a web service link, and if the customer comes to that link, it goes to that broker or that agent. It never comes to an insurance company directly as business. Number 3, the way the world is moving, without partnership, it is extremely difficult for any business. You look at Uber and Ola, hardly they own cars, but they're the biggest car share companies. So similarly, the way the world is now changing, and if I look at about hardly 5 years from now, the entire platform of insurance will be partnership. When I say partnership, the old partnership is there. It will be there, whether it's agent, broker. The new partners are who? Whether it's TPA, whether it's the health service companies, whether we are talking about people like Jeeves who are going to homes to repair certain things. ये तो देखते another 5 साल में insurance company will only be a carrier. They will only take a risk. If you look at globally, sir, if you look at globally, how many insurance companies really are in the forefront? आप उन लोग बोलेंगे ARR insurance, नीचे लिखेंगे risk carrier RSA, risk carrier so and so. They are actually big intermediaries, and we really feel our intermediaries must be at that level where actually customers treat them as insurance companies. So that is something I think for you to say that I was going to ask you a question. Who has asked anyone to advertise? Nobody asks. Everyone does it because they want to gain more traction with customers. And I think the business is always there. It's a reinforcement, nothing else. But the digital marketing is a very big science. We have not even touched the tip of the iceberg. We are just there at the moment as a reinforcement. But whether we are converting any of the data to our business, I doubt it. We have not even there. We are not there.
I opened the discussion with the interrogative type of question. I am one of the most active person on LinkedIn with highest number of followers in this country. I have been appreciated by LinkedIn from USA for being in the top 1% of the LinkedIn in the world. I believe in it. But the money power which the insurance companies are having, you put any question on the internet and there will be these 6-8 insurance companies whose names will appear, that is. Any intermediary, whether IMF or a brokerage firm or someone, that is, they cannot go on putting the money on SEO and this and that and all that thing that they can be on the front page. Creating the market, creating the awareness, it is the job of insurance companies. As far as social media is concerned, let me share with you that using the broadcast list, that is, I reach to maybe 7,500 persons on every festival with the greetings. And I get more than 3,000 replies from those that they are our customers. That's the way which is that as an insurance brokerage firm, that is we can afford. We cannot hire a person that is paying 3 lakhs rupees or 5 lakhs rupees per month for being on the front page or the first page on internet. That is, we have left it to ICICI Lombard and to other companies who have the money power. We are getting peanuts, that is. We were talking about health insurance and group health insurance, that is, all the big ticket sales are leaving. Less than 2% for the insurance brokerage firm out of a group policy. If someone is having different viewpoint, please come forward. When one is getting so little, and that is, how can we insurance intermediary can create it? No, we will not. We cannot do it. We will not create it. As far as WhatsApp is concerned, as far as broadcast lists are concerned, yes, we use it on the. Because when I was a child, I used to have it that on first day of the month at 8 o'clock, Radio Ceylon was always playing one song, Pehli Tarikh hai ji, Pehli Tarikh hai, Khush hai Jamana aaj Pehli Tarikh hai. I took the idea from that, and it is that on the first day of the month, we send greetings to all our customers. And we tell that, is there anything we can do for you in this month? And we get certain percentage of callback, where it is that the person gets shifted from another intermediary to us, because we sent greetings on the first day of the month. We did not send it only on first day of the year. So it is that I am very much a propagator of social media, but there is a limit to which we will spend out of those peanuts which we are getting. We have to run our business. We are having an objective before us of having the compliance, whether it is of Ministry of Corporate Affairs or of the regulator, and that is something like 36 certificates certified by chartered accountant are to be sent to regulator for uploading of your balance sheet and all that thing. And now it is that, and that earlier we used to do it ourselves. Now it is that either a company secretary or chartered accountant comes into picture. Our costs are increasing. Who is taking care of us? If TPA is one of the declining industry, then it is that, and even the intermediaries will also, and that is that they will have to reconsider whether they have to survive or they have to keep control on costs. So having over-ambitious thinking that and that insurance intermediaries will not do this, no, it is not at all acceptable. We are under pressure and we need support of the insurance companies, and that is, if you want that we should do it, we will do it, provided you pay us, that is. If that is, insurance companies are spending so much money on incentive tours, whether they take their agents, whether they take their intermediaries, whether they take an XYZ, that is why they cannot give us money so that we can use it for using social media. But if you think that whatever peanuts we are getting out of that, we are going to spend the money, no, it is not at all possible. Let it be very clear.
thanks for advocating our case in the first place. Sir, I worked for 30 years in New India Assurance Company, and I know that side also. And then I started my company more out of passion, I would say. I mean, I couldn't live without it, so I started my company, and I feel that in that social media famous framework of I&P, involvement and price. So we all know that where there is no or limited involvement and very less price, something like SIM card recharging. Maybe there is more of price but less of involvement, say business travel, air tickets. Where there is high involvement and high pricing, some of the segments are automobiles, cars, and also insurance policy. I think that being this high involvement and high price sector, a lot of attention is required. So probably like Shiv Saab said, lead generation. For example, this LIC has declared that effective 30th November, certain products will face their expiry date. They will design new products. This knowledge is there, but what does my customer, what does my friend do with this data? They would require further enhancement of knowledge, some detailing as to what they should continue, what they should buy. So for, I would say we have defined, maybe somewhat limited, as you rightly said, considering the budgets. Now about these budgets, the budgets are always under crunch for anywhere, for IMF like me, for a big insurance company. But customer demands are increasing, let's face facts about it. And with this situation, I feel social media is imperative, and that's what we are attempting. Thanks.
Can you throw light on it, that what should be covered in social media?
सर ये तो आपने गूगल ही डाल दी but let me first start with what I think what I think about how passionately you have expressed your point of view. 20 years back, or maybe 15 years back, Bill Gates was the richest person living on the earth, and today it's Jeff Bezos. His company's name is Amazon.com, and Amazon.com is a typical intermediary, if I have to put it that way. But I don't disagree with what you're saying, because when you start social media sales, whether you are an insurance company or an intermediary, your first year cost of acquisition, and let me clarify, your cost of acquisition in the first year is likely to be upwards of 300% of the premium that you collect, and this is when you are going to be very efficient. Over a period of 7 to 10 years, depending on what kind of investments the company is willing to make, you're likely to break even, and then that's when it attains critical mass and then starts to become profitable. That's the time horizon that one needs to have for the business, and any social media or digital business needs to have that kind of a thought process before they actually the businesses are moving digital whether we like it or not, and therefore if you're not willing to make this kind of an investment, your business is likely to see a downturn come what may. So I don't think it's an option today that you can stay away from investing in social media marketing or digital sales or whatever you call it. Now the pertinent question to ask is, why is this first year cost of acquisition upwards of 300%, 400%, 500%? And that's where the entire ecosystem needs to come together and work on it, because the customer is not financially literate. So I don't know whether this product really makes sense for me, or there is another product. Just because I've seen an advertisement of the product doesn't mean that it really fits my bill. Therefore, product simplification is the most imperative element in marketing any financial product, whether it is insurance, banking, or any other product. So product simplification, the industry as a whole needs to come together. It's not just it should not be left only to the distributor. The distributor, of course, needs to demand that this is a kind of product that I want. This is the product that will go through my digital channel, and the insurance companies will have to oblige, do more research and come up with the right product. That is one. Two is the customer needs to be educated. I quite like that mosquito bite product. Believe me, I'm going to take this discussion with my actuaries today. This is a kind of product that instantly appeal because people are able to relate to it. When you have a product where you have all sorts of cappings and you have all sorts of convoluted structures, the customer really doesn't feel interested. On the social media, because the attention span is no longer than 2 seconds. If your creative rendition is great, probably you'll have 5 seconds. In the rarest of rare cases where things go viral, probably you'll have an attention span of 1 minute. But that's rare. That's less than 0.5%. At best, you have 2 seconds, and therefore, if the customer is not educated enough and the product is not simple, it's not going to sail through. Your cost of acquisition probably will hover around 500-600% in the first year. And probably in 20 years, you might not break even. So the whole point is the industry as a whole needs to come together and look at what will make it a shorter break even, and second is what will make it more sustainable. And like you're saying, sir, 2%, your premium sizes are large. Your premium sizes are 2% of a very large amount. Anything multiplied by 0 will be 0, but your one number is very large. 2% is not a small amount of, let's say 2 crores, it's 2 lakh rupees. With 2 lakh rupees, you can do lots. Trust you me, when somebody comes and tells you 5 lakh rupees for SEO, they're only trying to rip you apart. There are ways and means where you can do it for far lesser. That said, you can't stay away from it as much as you may want to, unless and until you have a vision of getting out of the business in the next 5-7 years. You'll be fine. But if you're looking at a perpetual business, then I don't think you can stay away from any of these digital businesses.
See, the last point you mentioned, if by doing some group health policy one has got 5 lakhs or 10 lakhs or something, see, spending money in social media is that in case you are trying to reach the retail customers of a city or a state, unless and until you are having the availability of manpower to reach the customers who come up with the inquiry, it's not going to work. In the first instance, when you spoke, and that is yes, and that is, and whether it is Google or something, they are very much capable of having it, that your message can be sent in one part of the city into one segment and all that. That is very right. But then question is that are we talking of using social media for increasing the awareness of the customers, or we are trying to close the deal with the social media? These are two different things. This industry has not achieved in last 20 years in spreading the message of insurance among the masses. It has failed miserably, because they started by advertising their brand. AMFI has been able to spread the message of mutual funds, and there might be 2,000 or 3,000 mutual funds available in the market. It is that when the people have started SIP, that is, even when the returns have gone down, that is, people are still paying thousands and thousands of crores every month under SIP. That is the success of that. It is for insurance industry supported by the regulator, that is, they have to come out with the awareness of it. Unless and until that is done, there is no use in intermediaries trying to spread the message of that is. They are doing it in their own way, as I gave the example, we are very much in touch. We are using in so many things and all that thing. I am a propagator of social media, but the main responsibility lies on the insurance companies, and they cannot escape from that. They have to allocate money, they have to have it, and I appreciate Dr. Ashish Bhutani, CEO of Pradhan Mantri Fasal Bima Yojana, that when he took the initiative of 5%, then it is that all the insurance companies agreed. If 5% of the premium being collected under Fasal Bima can be spent on the awareness part, then why not for others? It has to be done.
On this point, I fully agree with you, 100%. I don't know whether you guys are aware or not, but the Life Insurance Council is coming up with its own advertisement on the lines of...
Same with general. We've all
insurance
contributed as per our...
Yes.
But that may not be social media, it will be all over.
It will be all over. Sabse pehle life insurance is the theme for life insurance.
Insurance also, sir, 5% नहीं है, 0.5% जो हम लोग करते हैं, which is substantial because we collect say 2,000 crores. On 2,000 crores, that amount is a huge amount, and we can do very good. But spreading awareness, definitely we have to do it jointly. But
and
it all depends who wants to go where. That's it.
And like you rightly said, the B2B business does not happen through social media. It happens through personal connect.
B2B2C.
And B2B2C, then that middle B has to invest.
Yeah, that middle B has to invest.
Sir, it is B2C. We are highly focused as a company on retail health. And 2 days back, team members who handle the claims support service, that is, I was looking at the statistics. Not even a single claim has been disallowed. That is the success of B2C. We do not try to close up retail business in the first meeting by giving the lowest price product, and that is, we give right product of right insurance company at right price. That is, those who talk of lowest price, we tell them that you watch TV every day, Akshay Kumar is advertising that company, go to them. It is that one has to see, let's take example of health insurance, one has to see that what is the need of that family, what are the pre-existing diseases they are having, what is to be covered, how much coverage they can have it. There is no use in selling a product which they will not be able to sustain next year, that is. So it is very systematic thing. You go to a chemist shop, a normal chemist shop in India is having 45,000 medicines. That is, you don't go and tell them that and give me the cheapest tablet, white tablet, and that is because my neighbor has got that one. No. It is, health insurance is a product which has to be sold to the customer after assessing the need of that family. And a family whom we had given health insurance worth 2,800 rupees 14 years back, today that family is giving us premium of 1,80,000 because those who were children in that policy have now become earning members and they have got married and their families have also come, and it is that we have gone to even the in-laws of the daughter who got married. That's the strength of it. It's a thing. We have to learn from life insurance corporation agents. That is, now it is that families are having a third generation of life insurance agents who are serving them. They don't drift away here or there. So it is that service is very important. That is why it has to be, again coming to the same point, is that sufficient reward has to be given to the intermediaries so that they sell the right product to the right client, so that it does not result in unnecessary claims and all that thing. It has to be that. We are in a service industry and we have to do it well.
Sir, point taken and accepted. I want to give examples of two different industries and how I perceive my role as an IMF or intermediary, broadly speaking. Number one, a movie is launched. Good subject, big star cast, that can help the movie to get initial draw. But movie becomes a hit only after the word of mouth spreads. People come second time, third, only that. So that this word of mouth, probably there we can contribute, intermediaries. Or a major book is launched, successful writer Chetan Bhagat, Amish, whatever. Reviews have come, people are tempted to read, but only when a third party tells you, "Arey bhai, wo बहुत अच्छा book है," only then you buy. So likewise, when insurance companies launch their products, when they are advertising, and we are also enlightening probably, but only when third person tells you that ये product बहुत अच्छा है, मेरे को ये फायदा हुआ. So probably there, that this kind of role I see for myself as an intermediary. That was my one submission. And one more thing, spare a thought for insurers. So many mobile technologies to address. So many new channels to cater to. So much training to be given to new talents. There is a virtually diverse pool, budget restricted, and so much expenses to be made. So perhaps there, to economize on that, that's probably our role is. That's what I see. Thanks.
Sir, I'll tell you a couple of things. First is I put on 15 kgs in the last 10 years because I'm very lazy. And believe me, anybody who's put on weight ever is because they've been lazy, and that's the fundamental nature of the human being. That's the reason Swiggy, Zomato, they all have been doing brisk business, because people want convenience, and that's really what has been driving Amazon too. People, like you said, the word of mouth today is not I talking to you or I talking in my gang of friends. Even in Calcutta, that chai adda is gone. It's no longer there. The social media or the word of mouth is now share on LinkedIn, like, share, right? That's the word of mouth today. Now, you mentioned, sir, cost. This is low cost. Increasingly, the market, or rather in the long run, the market has to become efficient. The insurance company does not pay the intermediary, trust you me. It is the customer who ends up paying everybody in the chain. And therefore, the customer will not continue to feed everybody in the chain, because there will always be somebody who will come and disrupt. So, couple this with the need for convenience, couple this with the need to pay less. Why does everybody want to buy from Amazon or Flipkart or whichever? Because there's a discount, it's available at a lesser price. The consumer durable industry has come to terms with the fact, now you go to Chroma, they talk about matching with Amazon. That is exactly how this, even the financial services industry is going to behave over a longer period of time, that people will start to buy on their handheld device. People will want the convenience that I do not want to invest time with the agent, the LIC agent. By the way, he or she is also now carrying those web apps and on their tablets and logging online. To your point, you will be surprised. Facebook did a case study on us. We train 10,000 of our employees through a Facebook app which is called Workplace. We have a studio and we have a training content team which creates fresh content every day, and it goes out to 10,000 people in my branches. Training starts at 9:30 a.m. every morning. I do not have a battery of 200 trainers in my organization. I leverage technology to train. This is what brings about efficiency, and the world will move towards being efficient, whether we like it or we don't. Our ways of operating will have to change. Therefore, insurance companies is not who's going to pay you more commission, sir. It is the customer who is no longer wanting to pay for inefficiencies of the system. So that's my submission. Thank you.
Please come up with the questions which you are having. Let's the panelists answer that.
Through social media, they will be asked.
Either we answered everything, or we answered nothing. Thank you so much for your time today. One second.
Thank you.
Thank you all panelists. It's a very interesting session. Now the last panel discussion. Yeah. Last panel discussion, the positive impact of artificial intelligence and robotic on insurance industry. I invite Mr. Ravi Krishnamurthy, President Life Insurance Company Limited. Mr. Abid Boni, Country Head and MD, Insured IT Technologies. Mr. Kamalesh Manuja, Head of Business, Edelweiss Tokyo Life Insurance. Please, Mr. Kamalesh.
Thank you.
Mr. Kamalesh, Mr. Ravi Krishnamurthy moderating the panel, please.
A very good afternoon to you, ladies and gentlemen. We have, between three of us, had some conversations about how do we want to talk about artificial intelligence. Just a quick rundown. I may, if I sound a little bit technical sometimes, bear with me. Fortunately, unfortunately, I run an artificial intelligence company which focuses on insurance as an area. But before I extend the whole conversation to the gentleman sitting here, I just wanted to kind of take a minute or so, and the idea is to demystify artificial intelligence. The way artificial intelligence has been talked about, it looks like something which is extremely difficult, extremely complicated. Only few people know how to do it. Only few people even deeply understand it is. So I have a very old anecdote. It's probably still relevant today in terms of what AI is. If you remember way back in 2005, 2006, there used to be Excel sheets, 256 columns in that, and that is where it was restricted to, and you used to do analytics in it. That analytics, by the time it reached 2010, became big data. And big data and predictive analytics, right? That predictive analytics, as it is, kind of took another leap 3-4 years, people started calling the interventions it machine learning, and 3-4 years down the line, you started calling it artificial intelligence. So at the core of it, AI is still the same 2006 Excel sheet analytics that people were doing. So fundamentally, what has changed? What has changed is those 256 columns that used to be in Excel sheet now have become probably they can be 256 million columns and it won't matter. They could be millions of rows and it won't matter. You won't need 1,000 people sitting for 1,000 days trying to analyze that Excel sheet which has 1,000,000 columns. It's just that you can now have the technological interventions available in which your ability to analyze large swaths of data, do predictive analytics, figure out patterns, take those patterns and then customize them for each individual to understand what you can do with that particular individual. The curation, so to say, of that. The last panel discussion was a very interesting conversation about the cost of marketing, the cost of acquisition. People sometimes don't realize how AI comes into play. There's a whole line of marketing in tech called MarTech. And it's AI in marketing, basically. Your ability to go and do micro-segmentation of a customer and really reduce your cost of customer acquisition by 300%, not have it as a 300% of your premiums. So AI in that sense is your ability to look at large-scale patterns in data and figure out how can you individually reach out and solve problems of an individual, not do mass customization. Right? Individual problem solving, right? That's what it is. What I'm going to do very quickly from here is I'm going to, go to my fellow panelists and try to give you a sense of what AI is, its relevance in today's context from the gentleman. So, Ravi?
Thank you very much. And good afternoon, all of you. So, I think he has very quickly and very efficiently put it across that it's 2006 Excel sheets with more columns, more rows, and more data. The truth is that the capability of intelligence or capability of understanding of data multiplies with the expansion of our ability to collect data. Currently, data is disjointed, and therefore, the ability to do data analytics becomes very limited. The play of artificial intelligence comes in when we are able to get more aggregated data across various points. And why that is important to the industry, to the insurance industry, is the cost arbitrage that is currently there in all our products and processes. The product pricing is dependent on the process costs, and the process cost is a function of productivity of our distributor, and the productivity of our distributor is ultimately a function of how many visits he makes for one customer acquisition, how many leads he goes for to get one customer. That's the ground, at the ground. Now, if that productivity has to improve manifold, what has to improve is trust. And I'm not talking of trust from a brand perspective. I'm talking of trust in terms of customer trusting the pricing, the product, the need analysis, and the benefit. And this comes when we use large data sets to understand data about customers in terms of their profile, in terms of their education, occupation, income, and most importantly, using surrogates like consumption patterns, spending patterns. And that's the perspective which I have, that the biggest benefit for the life insurance industry is to create a better trust on the entire set of data about the customer, which will lead to manifold advantages. How will it lead to manifold advantages? It will create better predictability for the actuaries, because the actuaries will be able to understand customers better, and therefore their ability to price becomes better. It will create better trust among distributors, because the distributor now goes not with X number of leads, but it goes with a quality of lead. He goes with a certain assurance that this lead will fetch this product. The third important thing is in terms of, and this actually would lead to what we call in the previous discussion also about penetration. Actually, penetration is only a function of how trustworthy is the data that I have about the customer. And if I don't have enough trust on the data, I am going to play around a lot, I am going to increase my cost, and that cost is not going to be to the liking of the customer, and that cost I am going to load it somewhere in the form of reduced benefits to the customer. And that's where the industry itself is currently, 15 years, 16 years of evolution of the private sector. We haven't achieved great amount of penetration, because still in public language, insurance is still not respected to the extent which we would like it to be. And the main reason is that customer thinks that he's taken for a ride, because the invisible costs are very high. And the only way to beat the invisible costs is to build better predictability in our insurance companies on the data set. I just leave it at this point of time right now. As the dialogue progresses, maybe we'll have more data understanding, better ideas and innovations coming.
Samir, if you could give a context, give an example of what is your views on this.
Okay. I think before we go deeper into this subject, and as what Amit talked about, it's quite technical, right? And it sounds that as if a technology person, is articulating things. But if you really look at AI from a fundamental definition, it is nothing but is making the machine intelligent. Okay, it is what human is supposed to do purely from a cognitive point of view. You create or you build the machine to kind of mimic the entire cognitive behavior. Simply put, I think what Amit talked about, Excel sheets, what Mr. Ravi also talked about, where it can be, create value at the different spheres purely from an insurance point of view. I think, it is nothing but you can visualize a spider web, okay, where if I were to kind of get a human to kind of connect all the dots, it will be, little difficult to make sure that you do it time and again in a repetitive fashion with perfection, which could be a customer service to operations to sales management to kind of a need-based selling from a consumer point of view. Your AI part will be able to connect every dot, identify outliers and provide you corrective actions, which to an extent sometimes becomes very, very difficult from a human point of view. I don't want to get into technical because there are many areas where AI can help you, but I would want to give you a beautiful example, and I'm sure all of us on a day-to-day basis are using AI. Everybody is aware about Siri, everybody is aware about Echo, everybody is aware about Google Assistant. I'm sure we are using this particular bit. Okay, I'll just give you a use case which is currently being followed or currently being implemented. Think about on a lazy Sunday, you are at home, okay, and you installed a Echo device or a Google Assistant at play. You're about to travel to Delhi, let's take an example, after 4 days. And how does AI come into play? Okay, the way AI will come into play is, the first and foremost, you kind of inform your voice analytics or digital analogs that you would want to travel to Delhi, and that's it. Okay, imagine the AI engine will come and tell you, saying that, hey sir, do you want me to book a ticket for you? You just have to say yes, do a booking of a ticket. It searches the internet, be it a Trivago, be it a Make My Trip, be it a Clear Trip, and it actually kinds of gives it to you, saying that this is the cheapest option, which would you want to travel? And you kind of register your wallet, which is already either in a form of wallets which we have created. It says, do I debit that particular bit? And you give your authentication through a voice command. And it doesn't end here. The interesting part is, you on a Sunday, you decide to go out for a dinner with your wife. You go out for a dinner, it actually before that says that, do you want me to find out the best deals available for you? You actually get the cheapest deal on the restaurant, it books a table in advance, and not only that, when you actually come back from the dinner, you're chatting with your wife, the Google Assistant or the Amazon Assistant prompts you, sir, it's already quite late in the night and you're chatting. I think I would advise you to sleep, else you will not be able to catch the early morning flight. And more importantly, when you get up, it gives you an auto alarm in the morning. And while you're about to leave, it says that, do I want you to book an Ola or an Uber? And not only that, it also prompts you with a weather tip, saying that, please note, it's raining outside, you need to carry your umbrella. The long and short, and I can go on and on that particular bit. The point I want to make it, it's not only, these artificial intelligence are going to influence our lives, but are actually going to nudge us at every stage to give us guidance. It's left upon us whether you want to pick it up or not, but it will definitely create a difference with what we are operating.
Cool. Thanks so much. It's interesting what you're saying. I want to give you a quick one or two examples from my previous life in terms of how pattern recognition or predictive analytics, which is necessarily a precursor to AI, has helped us. So before I started this venture, I was CEO of Motorola in India for about 5-6 years. And we were known essentially as a company which would do mid-tier devices, so Moto Gs and so on and so forth. We were launching a 40,000-50,000 rupees device, and the argument was, how much are we going to be able to sell? Right. This is 2015. Samsung was still entrenched. We were challenging. We decided, how are we going to really be in a position to go and challenge them and take some share away from them? And because we used to work very closely with Flipkart, we analyzed a lot of data through predictive analytics, through AI algorithms that were built as a part of a contained data set. You'll be surprised, we couldn't find any correlations on how to sell a lot. We eventually did proxies which were thrown by the predictive analytics, saying search for those people on Flipkart who buy high-end Bulgari perfume. We took Bulgari perfume buyers, targeted them, and ended up selling 300% more than we wanted to sell. I'll give you another example. And that is what AI does, which is not generally possible in smaller data sets or smaller analysis sets. A lot of you probably take Ubers and Olas. I'll recommend you to book an Uber from a low-end device versus using an Apple iPhone 11 and see the pricing difference. You will be surprised. When one of your agent goes and tries to sell an insurance, you really want to know if he's using a Xiaomi 8,000 rupee device or he's using a 1 lakh rupee ka iPhone. And depending that, your systems will throw back the right kind of insurance that you should be pitching. If you can sell a 50,000 rupees ka policy, you don't need to pitch a 5,000 rupees ka policy. You know why? Because one, if it actually sells, you will lose 45,000 rupees. Two, the chances are he's not going to buy even that 5,000 rupees ka policy. So the data really comes into play, AI really comes into play. So I'm going to move on again. If you can talk a little bit about the relevance of AI in context of Indian insurance, and what are the problems that we have currently that you believe can be solved by AI interventions?
So the beginning of relevance of artificial intelligence and robotics to the insurance industry is at this nascent level right now. What we are right now seeing both in the banking and the financial services industry as well as in life insurance industry is a beginning of chatbots, servicing of customers when customers go to the net, customers make calls to the call center, a little bit of artificial intelligence working to predict customer outcomes and suggest to customers the next best action forward. This is at this level at which we are. And some amount of work has happened on repetitive task automation in the process side. Now, where does artificial intelligence throw up opportunities for us? What is the life insurance industry's basic concern? Its basic concern is its ability to predict mortality right, its ability to choose the best customer for its agent in the quickest possible way so that to make the distributor more productive. And the third is, of course, fraud management, to make sure that wrong lives don't creep into the system. And the fourth important thing is enhancing penetration, because insurance works on law of large numbers. So only if I build a large book, my pricing will be competitive. So how do I build a large book? I need to improve my penetration. So the relevance of artificial intelligence is twofold. One I would talk about, or rather threefold I would say. One is at the front end. How do I equip the distributor to pitch the right product? Second, if you look at the middle level, how do I build products understanding customer needs better? In a few years from now, with the arbitrage cost coming down, I don't rule out differential pricing for customers and the power of pricing moving from the insurance company to the customer's hands. In the sense that if the customer comes, say for example with a health card, and say this is my health card from a reputed TPA, I must be able to offer him a differential pricing, because I wouldn't do an underwriting, I wouldn't ask him to go for a medical test, I would know the customer's profile and his medical history better. There is greater trust, as I mentioned. This is also a question of trust. How much do I trust the customer will decide his pricing. The more I build ecosystems of trust around, the better is my ability to offer differential pricing to set of customers. On the actuarial side, the ability to analyze large set of data, understand that data, and to be able to do better pricing. Today, pricing will factor in aspects which are not predictable, aspects which are opaque to me, because data is disaggregated, it is not together. So I don't understand many aspects of the data, so I tend to put margins over my costs. Those costs can come down. And as a result, the best deal for the customer and the best deal for the insurance company, there is a lot of opportunity to optimize both the ends.
Cool. Your perspectives on this?
No, I think Mr. Ravi's already talked about the whole value chain from an insurance point of view. But something which is, I would rather want to add is, I'm sure all insurance companies are at various stages of implementation of AIs. The first and frequent one, or people who've done it, and in fact there are statistics which are available, which are talking about the voice assistant, which is nothing but in a form of a chatbot to kind of a Siri kind of an capability. It's large amount of insurance companies have already moved on that particular, while everybody is at a different level of evolution. And the second part where we've seen a huge amount of success and implementation is purely on the risk management practices. Okay, be it, there are apps which insurance companies, especially on the GI space, they've launched on the motor part, where they're taking the picture and assessing the loss. And not only one, they are, formulating their processes the way internationally Alibaba does. They have a concept called as 301, which means you take a picture, assess a loss / take a decision in 3 minutes. You have 0 touch points, and you do everything in a single connect or a single part, which is the first time right. Okay, so that's what the internationally organizations are moving through AI. In India, it's unfair if I have to name one insurance company, but I see an innovation happening on the GI part, where there are motor claim assessments happening on underwriting sides, where the behavioral part of coupling with social media, which we heard in the previous panel, is getting picked up and identifying cues whether the person is hospitalized or has a history of a non-disclosure, which can be material enough for an insurance contract. And last but not the least, telematics is a classic example on the motor side, where it is kind kind of moving towards saying that pay as you use. If you really look at it with Ola and Uber evolution, one of the things is people have stopped using their own vehicles on a daily basis, okay? It serves multiple part. But if I have to look at the classic advantages, today I am paying a motor premium for 365 days. But if I move and if I figure it out from a behavior perspective, that I only use my motor insurance for motor vehicle for 180 days, can I actually pay for half a year instead of 1 year? So these are the things which are happening from an innovation point of view, and I'm sure all insurance companies will come up at different pace to catch up the rhythm.
Let me add one more layer to what he said. One of the key inputs to artificial intelligence, especially in a country such as ours, wherein systems are essentially disparate, the commonality or the denominator of system-wide evaluations is very, very low. So IoT really starts coming into play. In India, artificial intelligence will by and large be powered by IoT-based devices. So whether, like he's talking about OBD devices, you're talking about wearables in case of health, or you're talking about home protection systems, which will result into how you evaluate property things. But fundamentally, in our firm, we essentially think that there are 4 major problems that need to be solved using AI and IoT both. One is around the area of distribution. How do you really go in broad distribution, making sure whether it's insurance companies or intermediaries, that their cost of expansion of distribution is actually low? How do you ensure that there is affordability that you can bring into the products and services? How do you ensure that there is a personalization of premiums that can be done to a large extent? And how do you believe that there can be experience that can be managed? Now, one of the things that generally we talk about but do not quantify is the impact of experience, right? We talked about AI and Ravi was talking about trust, right? One of the simplest things to do to gain a customer's trust is, for example, policy analysis. Is consumer getting the right policy, yes or no? So one of the things, for example, that we are trying to do is, using AI and machine learning, read a person's policy document and then do an assessment. And this may be his previous policy. He may be up for renewal. Look at that policy and actually give a very clear assessment that looking at this policy, looking at what you have been taking care for, and what your requirements are you really matched? And if you're not matched, then what do you need to do? Do you need to go up? Do you need to, is it good enough? Or do you really need to, you can come down as well, right? Maybe you take something additionally on top of that. So AI will have some play along with IoT devices in India, and I think we actually already see a couple of very forward-looking companies in India looking at IoT and what IoT will bring to the table along with it.
Yeah. But let me tell you, in the year 2009, we started with these vitality cards, okay, in my previous company, where this so-called scores could intelligently translate into underwriting issues for health. Either we were early for recognition or it did not work. I'll give you telematics. Telematics as an example, I think in my both companies where I worked, where I'm still working now, and the previous one we used, and we had to drop the project. Right. The reason is India ready for an IoT related rating? The easiest one that we could get success around, and currently we were featured in the Gold Coast Gartner conference after Pingyan in our success of AI in absolute claim settlement. Nowadays we use 20 models where we are able to settle claims, and that has become very easy for the intermediaries as well. If the customer calls up, by the time the in-house surveyor also reaches, the claim is already settled. So but we have limited success. Now why I'm asking about IoT, because I really want to learn if anybody has been able to use it, because we've been talking about this for the last couple of years.
Yep.
And two companies of mine where I worked, we had to pull out of this exercise. Because 2 reasons. One, in India we have some limitation with the OEM rating. Even if you want to use, in my current company we are using 3 parameters in rating a particular person. Like I have a Honda City, or you have a BMW, or I have a BMW, the rates are different based on 3 things: where you live, your credit card scores, etc. etc. However, what happens is when we cannot quote below the OEM rates. So customer experience then is very difficult to be, I would call it, harmonized with your experiences. Second, an IoT health. So has anybody used IoT to rate health insurance? so far? Because I've been listening to this, and I myself experienced with telematics. We had to pull out of telematics because customers do not want to pay. They say कि आप free में देते हैं, and the only product and feature in telematics which they love to use is, what I would call geofencing. Geofencing, where my driver is taking the car or my fuel tank is getting empty, or safety part of it.
Yes.
So I want to understand where can we use, because for me all these commercial vehicle accidents actually can be, this is my next thing I was thinking about, then we can actually avoid some of them if the telematic beeps come somewhere, if the vehicle is done. So please share your experience on that.
There is more than one answer to your question. One is, were you too early in 2009? Absolutely yes. Somebody should have told that that's not the time to do it. The biggest issue is that IoT does not work well without what we call an IoT network. So either you need to have something like a Sigfox, you need to have LoRa, you need to have NB-IoT as network. Unless until you have some of that in place, there is no point doing IoT. Second is IoT is only, it's in tech we call it GIGO, right? Garbage in, garbage out. Your deployment of an IoT product and what data are you choosing, algorithmically what you want to do it is completely dependent on you. As two companies with the same access to same set of data, one can make magic out of it and other can create garbage out of it.
I'm just asking you, this is all theory which we are aware of. I'm saying, do you know of any live
There are live examples.
In India, not from the life company, from the general insurance company, where IoT has been able to help them in either rating a policy or settling a claim?
So we are working with at least one, not at liberty to disclose the name, but we are definitely working with one on the health side, wherein they are picking up data from wearables, and not necessarily only a wristband kind of a situation. You can have multiple kinds of wearables, and taking that data and taking that into their underwriting
So
algorithm.
have they applied for the sandbox environment with IRDA on this? Because IRDA just asked for a sandbox environment. So has that happened?
Yeah, so I can offline tell you the name of the company if you wish. No, so the reason why I'm saying is the use case is a lot of cashless approvals. There is an insurance company who is kind of using AI, purely approving an insurance claim in 3 minutes. That's fine.
Yeah, but that's not IoT. That's not IoT. That's artificial intelligence use. That is not IoT.
No, they're actually looking at other parameters from which
artificial intelligence, what you're saying about cashless, more or less every company is going through.
No, I'm not completed. So the addition part is what we talked about on the variable part is the health insurance companies are, in fact, the new age standalone ones have actually kind of picked up the customer informations. In fact, I'm
either intermediaries will do, tech firms will do, but by the end of the day, mass adoption has to come from the companies themselves.
I just wanted to add one point to this, that garbage in, garbage out. It's also the governance which has to come into place as the AI model and the IoT model starts picking up. It's not just the technology piece that is critical to us. It's also about how data is shared and how among whatever data privacy laws we have, how is data aggregated agnostically and how is it useful to the industry at large. And at an industry level, if there are protocols which are put into place, then it will help in better quality of data analytics and better usage also. Otherwise, in reality, small sets of data, disjointed data is not going to help us in any way.
Can we just, the next and perhaps the last segment that we want to touch, and if then you have any questions, we'll be happy to take that, is from your perspective, where do you think are, let's say, low-hanging fruit from Indian insurance sector perspective, wherein interventions from AI, IoT can happen?
On the immediate context, I would look at the process cost efficiencies, which is a low-hanging fruit, because that's a whole set of process inefficiencies which are still available as opportunity zones for improvement. So that is one set. The second set is fraud prevention and risk mitigation. Today, zoning in on customer profile, location, and ability to put that back into the underwriting engine and ensure that you are able to underwrite better and reduce your cost of fraud management. These are two immediate low-hanging fruits, and there is substantial amount of data analytics which is already happening in the industry and will continue to improve. And the third piece is distributor efficiency and productivity, where work is just about started. How do you equip your distributors with the best quality of understanding of the customers that he is meeting, and therefore his ability to pick up that policy faster and qualitatively in a better way, where the customer needs and the distributor needs are optimized. These are the three low-hanging fruits in my opinion right now.
No, I think AI is something which I gave you that example how personally it can kind of be your personal assistant. But if I have to look at, the scope is far deeper, far encouraging. The first and foremost which is coming top of my recall is AI can actually help you to identify whether it is your known user or unknown user into your system. So it can actually use like a cyber security. Your credit card pins, your credit transactions, your financial transactions actually can, AI can help you. Something which all insurance companies are moving digitally. The second big use case people are using is face recognition, which is nothing but mapping with your KYC documents and saying, hey, whether it's the same person, and same can be used at the claim stage. Data analysis, the classic part as a part of the use case is IBM Watson has tied up with a company called Fluid, where any person who's going on internet is actually kind of doing crawling and figuring it out whether you can use that particular customer as a part of the lead. Okay, so that's the part which is coming. Voice assistant, I've already given an example in terms of Siri. Robotics, which Mr. Ravi talked about, is in our organization we've kind of deployed robotics in a form of making sure that anything which was a repetitive process, we kind of automated it and eliminated a human intervention. So these are the things, and I can go on and on, but these are the simple low-hanging fruits or transactions which one has an ability to automate and probably create a very efficient sales process or a risk management process.
One of the things that I would really encourage all of you to do is, he gave an example of 301. There are leadership companies across the world doing multiple things that's really going to really push the envelope in terms of what companies are possibly going to do. There's a company out of US which is just about a month back started issuing insurance by taking a picture, just a picture of the face. They're saying you don't need to do any, it's an image processing computer vision company, right? A lot of insurance companies are transforming themselves into a service hardware model, right? Because they do believe that there's an IoT will become mainstream. Actually, one of the things that we in our company believe very closely to our heart is in next 3 years' time, the chances that you're going to sell an insurance product without IoT is practically zero. And that change, and the speed of that change is going to be so rapid that it's going to catch a lot of folks unawares. You should definitely look at companies like Vitality, which have taken forward-looking positions on how health insurance can be delivered with IoT products and AI. Ping An in China, and amazing success stories, right? It's a question of taking that leap of faith, knowing it with respect to the larger context of how the businesses need to be run. Otherwise, there is this rut in which we'll all still be stuck, not knowing how to bring in some of these changes. AI, as I mentioned earlier as well, it's up to you. What do you want it to be? What do you want it to do for you? That from me. Closing remarks from you?
The one thing that Amit has made it very clear, and which is the big warning signal to us, is how distribution itself shapes up in the life insurance industry. That will change, and it will change extremely fast. So AI and IoT are pieces which we will live with, and our lives will change, customers' lives will change. And I see huge possibility for insurance, which is today a push product. It could translate at least to some extent into a pull product.
this is something like, you can listen to me again and again, but you can't avoid it. That's AI subject, I would say. I'll probably close it with few statistics. In 2014, almost in AI, there was a $300 investment, or $3,000 investment which was done in 2014. It's a very meek investment, I would rather say. However, in 2018, almost 6 billion devices have got connected to AI, which is through IoT and through other part of it. In 2019, almost 20% of, in fact, iPhone was the first one to kind of launch its voice assistant. 20% of the transactions on iPhone happens through a voice assistant. It is being said that within a decade, or by end of this decade rather, 16% of the jobs will be almost replaced through AI. So that's the power, that's the multiplication which we are seeing only in last 6 years, which is happening. And it is predicted that almost half of the devices what are being used will be connected within a decade through the voice assistant. So that's something which is the power, and what Amit talked about is an insurance company will almost become obsolete if they don't utilize these capabilities which are available, because otherwise the cost of acquisition or cost of transaction or cost of management will be exponentially higher. So with that, I just want to end that and pass it on.
Great. Thank you very much, gentlemen. If there is any questions, we'll be happy to take. Otherwise, we'll call this session to a close. All right, great. Thank you so much.
Thank you. Thank you.
Okay, very interesting section. AI become more deeply integrated in the industry. Now the last session, award category. First I invite Mr. Shiv Tiwari, please. To facilitate. Facilitation, please. No. Best Principal Officer, GP Parsik Sahari Bank Limited, Mr. Santosh Tukaram Matre, please. Best Actuary Life Insurance, Mr. Subhendu Kumar Bal, SBI Life Insurance Company. Best Finance Officer General Insurance, Vigil Shah, SBI General Insurance Company Limited. Now I invite Anamika Madam, please. Thank you, Mr. Shiv Tiwari. Best Communication Officer, General Insurance, Rajul Barde. Best Communication Officer, Life Insurance, Mr. Raheja Rathod, Canara HSBC, OBC Life Insurance Company. Best in Insurance Tech Professional of the Year, Mr. Dhiren Var and Mr. Jaginish Ved. Viveva in Tech.
See the name again.
Yeah.
To clap on it, no?
Yes, correct. Yeah, Mr. Dhiren Ved and Mr. Jignesh Ved.
Thank you.
Yeah.
If you want a photo.
Young Achiever of the Year, Mr. Ashish Sampath.
Oh, yes.
Yes.
I request people to clap a little louder.
Best President, General Insurance, Mr. Ravi Krishnamurthy, SBI Life Insurance Company Limited.
Congratulations, and you're doing so well.
Best Chief, now Mr. Ravi Krishnamurthy, please come. Madam, thank you. Yeah, thank you. Best Chief Distribution Officer, Ragesh Kaul, Edelweiss General Insurance Company. Sir, please. Thank you. Thank you, Mr. Now I invite Mr. Vivek Jain, please. Best Chief Marketing Officer, Life Insurance, Mr. Karthik Raman. Best Chief Marketing Officer, All General Insurance Company, Mr. Anjan Roy, New India Insurance Company Limited. Best Chief Marketing Officer, All Life Insurance Companies, Mr. Shiv Tiwari, Reliance Nippon Life Insurance Company. Sure. Best Chief Executive Officer, Mr. Girish Kulkarni, Star Union Daiichi Life Insurance Company. Best Chief Executive Officer, Web Aggregator, Mr. Naval Goel, PolicyX.com. Best Chief Executive Officer, Life Insurance, Mr. Ashish Vora, Reliance Life Insurance Company. Okay. Now last session, I express my sincere thanks to Chief Guest, Keynote Speaker, other speakers, delegates, and our sponsor, IDBI Federal Life, IBAI Insurance Brokers Association of India, Insurance Foundations of India. That's all. Now please wait for a lunch. Thank you all.